have any questions, you'll be using the chat section. So I believe we am audible enough and you can see my slides, and therefore we can start. Now, we'll be going through management accounting, and I believe the session is being recorded by Icpar. It's important to attend this session. We'll be having two sessions today, which is Wednesday, from 5 p.m. to 9 p.m. and then also on Sunday from 8 to 12 noon. From 8 to 12 noon. So there will be two sessions. Now, management accounting, remember, I believe by now we have all read management accounting and we are just in the process of revising, and you can see how to guide you as you prepare for the examination process. Management accounting, remember, are accounts that are prepared to assist management in decision making. So any form of accounts that are prepared to help managers in their decision making are known as management accounts. Now, in this management accounting session, what are we going to look at? Okay. The session is being recorded, so the people sending requests to record, that request will be declined, so you don't need to send it. Now, in management accounting, through these two sessions, we'll be looking at the necessary exams tips that you should follow as you prepare and do your management accounting exams. We'll also be looking at how do we plan and manage our time before and during the exams. How do we tackle different questions? Management accounting has got a total of 7 questions in exams. How do we tackle such questions in exams? How do we practice for the exams, the different practice examination techniques? How do you link the different topics that we have in management accounting? Management accounting basically has got 4 key areas. There is what we call costing techniques. There is what we call decision making. There is what we call budgeting or budgetary control, and there is what we call standard costing. So there are 4 key areas of management accounting. There is what we call costing techniques. There is what we call decision making. There is what we call budgeting control, and there is what we call standard costing. So management accounting is very wide, but it can be divided in 4 key areas. So we'll be looking at those 4 key areas of management accounts. How do we link the 4 different key areas of management accounts? And then finally, we'll be looking at how do we review the common topics in exams. Finally, as we wind up, we'll pick some few topics. We may not cover all topics in 2 sessions. 8 hours is not enough to revise all topics. So we'll be picking some selected key topics in management accounting, and then we'll be picking some questions from them. Remember, I've said management accounting has got 4 key areas. There is what we call costing techniques. There is what we call decision making. There is what we call budgetary control or budgeting, and there is what we call standard costing. So I'll be picking 4 key areas. I'll be picking questions from those 4 key areas in exams. Now, in management accounting exams paper, there are normally instructions that you should read. The first page of the F2.1 management accounting exams has got the following instructions. It's important to enable us know how to manage our time during exams. So the time allowed in management accounting is 3 hours, 15 minutes. 3 hours is the writing time, and the first 15 minutes is what we call reading time. So in management accounting, it's a 3-hour paper, and there is what we call 15 minutes reading time. Management accounting paper has got 7 questions in total. That's the second instruction, 7 questions in total, but you are not to attempt the 7 questions. You are only to attempt 5 questions out of the 7. And at the end of each question, marks are allocated. Each question has got a maximum of 20 marks. Each question has got a maximum, each of the 7 questions has a maximum of 20 marks. And all workings, and this is important, any figure that does not appear in the question, you must show how you worked it, how you solved it. All workings must be shown. If you fail to show any working, you have lost some marks in exams. So remember, all workings must be shown in exams. Now, reading questions and understanding the requirements. So in each of the 7 questions, you must read the question very carefully and identify the instructional verb. What do you mean by instructional verb? For example, the question may be asking you, explain. If you are to explain, maybe types of standards. Maybe we have 4 types of standards. We have what we call ideal standard, attainable standard, current standard, and basic standard. So if the question asks you explain the 4 types of standards that we have in management accounting, by you just listing them, by you saying there is ideal standard, current standard, basic standard, and the other one, attainable standard, you don't get all the marks because the verb was explain. So you list and you explain each of the standards, if that was the question. So you must always identify. But if the question asks you to list, you can just say it's ideal, it's current, etc. So you must always understand what the question asks you. Remember, a question can have 2 parts in one question. For example, you can ask, explain giving examples. So in that case, you list, you explain, and then you give examples. So always ensure you read the whole question to understand what the verb is, and if it's a question with more than one requirement. So that is my second point. Remember, there may be more than one item to answer within each requirement. Like I have said, the requirement can be explain giving examples. So that is 2 requirements. There is the explanation and there is also giving examples. So don't only explain and leave examples. You'll earn half of the marks because you did not answer the entire question. So that's the second point. Remember, there may be more than one item or one thing to answer within each requirement. You must use the marks allocation to work at how much depth you need to go in answering your questions. So the marks that are allocated at the end of each requirement should guide you how deep or how far you should go when answering each of the questions. For example, if a question has got 1 mark, the explanation you'll give for a 1 mark requirement is different from the explanation you'll give for a 5 mark requirement. If it's a 5 mark requirement, it requires you to go into much more details. Make sure you are always answering the question set and not the one that you'd like to answer. Normally, sometimes we face challenges where somebody just answers his own question. The question maybe has asked you something different, and then maybe the question is maybe on limiting factors. And then you just write for the marker anything you know about limiting factors. Ensure you are answering the question that has been asked. Don't just put everything that you know about limiting factors there. Ensure you answer the specific question that has been asked. And that you can only answer if you prepare adequately for the exams. What are some of the tips you should follow when answering questions? You will be expected to manipulate numerical information using techniques that you learned. Perhaps more importantly, you will need to interpret that information. Remember, management accounts are accounts that are prepared to help management in decision making. So once you have calculated whatever you've been asked, it's good to interpret whatever you have to help a manager make an informed decision. Maybe you have been asked, which one of the following is a limiting factor? So maybe you calculate, you identify whether materials is a limiting factor, you identify whether labor is a limiting factor, and then you make your conclusion that based on the calculation, materials is a limiting factor and labor is not a limiting factor because the materials kg needed are more than the materials kgs available. So you must interpret the result you have got. Knowledge provided by the analytical review of this information is key for managers to make informed decisions. So remember, these accounts are prepared to enable management make informed decisions. Planning in the exams room. How should you manage your time in the exams room? So we have said the paper is 3 hours, 15 minutes. The first 15 minutes is called reading time. So out of the first 15 minutes reading time, use the first 10 minutes to skim through all the 7 questions. So don't just read question number 1 and start doing it. You'll not be, of course, allowed to start the question in the first 15 minutes. So the first 15 minutes, 10 minutes out of those 15 minutes, use it to read through all the 7 questions and try to read very fast so that you are in a position to read all the 7 questions within 10 minutes. Now, why is it important to read through all the 7 questions? To enable you know the topics from which each question came from. For example, question 1, you may find out that maybe it came from standard costing. Now you ask yourself, based on this question, do I have enough? Do I remember everything I covered in standard costing? So use the first 10 minutes to skim through, to read through all the 7 questions. Point number 2, identify the topics from which each question is. So what do we mean by this? For example, you must identify, maybe question number 1 is asking on standard costing. Maybe question number 2 is asking you on budgeting, is testing on budgeting. Maybe question number 3 is testing on process costing. So you must identify the topics from which each question was set. Number 3, now once you have known the topics and you have known which one you are comfortable with and which one you are not comfortable with, that leads you to point number 3. Choose the 5 questions out of the 7 that you can attempt. Don't just start with question number 1. You may find that question number 1 is difficult to you. Remember, what is difficult to me may not be difficult to another person. So choose the 5 questions out of the 7 that you can attempt, depending on the ease with which you can attempt them. Now, once you have agreed that maybe I'll do question number 1, I'll skip question number 2, I'll skip question number 3, and then I'll do the remaining questions. You have decided you'll be doing question number 1, question number 4, question number 5, question number 6, and question number 7. I'm just assuming that. Now you arrange those 5 questions you have chosen in the order that you want to attempt them. You must not start with the first question. You can decide that according to you, question number 4 is the easiest. So start with the question that is easiest to you. So out of the 5, point number 4, out of the 5 questions, rank them in the order in which you will attempt them, from the first to the 5th. The ranking is based on the ease with which you can attempt the questions. Remember that ranking is based on your ability to attempt all sections of each question. If it is question number 1 and it has got A, B, and C, make sure if you choose question number 1, you are in a position to answer all the parts of that question. Don't choose question number 1. Once you have started it, is when you realize you can only answer part A of it, and you cannot answer part B and C, and maybe part B and C is 15 marks. The only part you can answer is 5 marks. Make sure any question you choose, you are in a position to answer all sections of that question. And we have said, start with the question you are in a position to maximize marks on. Remember, in accounting, we test on time and we test on accuracy. So make sure as you start your questions, you are in a position to manage your time effectively. I'll come back to time management. Now, ensure that each of the questions you attempt, you are comfortably in a position to get at least 15 out of 20 marks. If possible, 20 out of 20, but you must not get 100%. So make sure every question you have selected, at least the first 3 questions, you are in a position to get 15 out of 20 marks based on the order you ranked them. Now, if you can get 15 out of 20 for 3 questions, that's already 45%. And then you are still remaining with 2 more questions to attempt. And in those 2 questions, maybe they are the ones you could least attempt. Maybe let's assume you get a score of 10 out of 20 in each of those questions, and that will already be 65%. The strategy to this is to prepare for all topics. Make sure you are comfortable in all the topics in management accounting, so that if you are comfortable, a question may come, you may be comfortable, but the question is still challenging. That is why you'll now be forced to do the ranking, which question you'll attempt first and which question you'll attempt last. Remember that the strategy you put in place must be decided in your first 10 minutes. What do I mean by the strategy? Which question will I answer first? Which question will I answer second? Which question will I answer last? If you have the right strategy from the onset as you start the exam, you'll be in a position to manage your time effectively. And finally, I'm trying to say in this case, to pass, you don't need to get 20 out of 20 in each question. Managing your time effectively and identifying easy marks available. What about these? Point number one, in every exams, there will be easy marks available in all sections of the exams, and students who answer these questions usually perform well. The point I'm trying to say, not the whole paper can be hard. So there can be some easy marks, what I normally call free marks. It does not mean it's free. It means that it's a topic that you are comfortable with. So if you start by answering the easy marks, the topics you are comfortable with, you have a higher chance of passing compared with somebody who started with the hardest topic. Students who do not manage their time and miss easy marks make it much harder for themselves to pass the exam. So ensure that you start with the easy marks first before you go. The last questions you should be covering in your exams are the ones that are hardest to you. You must make sure that you are using your exams time effectively to identify any questions that you can easily tackle and plan the order in which you will answer the questions. We have already agreed on that. What are some of the common mistakes people make that costs us in maybe exams, management accounting exam? The first mistake is lack of ability to interpret the calculations performed. You have done the calculations very well. Maybe the question is from standard costing. You have done the variances very well. You have calculated the variance and then you fail to interpret them. You fail to know whether it is favorable or it is adverse. That is lack of ability to interpret the calculations. Or maybe it's a topic on make or buy decisions. You have already done your calculations, but you fail to interpret. Should we make or should we buy? So that is lack of ability to interpret the calculations performed with reference to the scenario given. The second mistake or pitfall, a pitfall is a mistake, poor interpretation of data. Maybe the question has asked you to value stock using FIFO, and then you decide to value stock using average cost method because average cost method is the method that you know. Make sure if it is FIFO, you use FIFO. If it is LIFO, you use LIFO. If it is average cost method, you use average cost method. If you don't remember average cost method, don't attempt the question. Go for another question. It will cost you a lot to waste 20 minutes answering AVCO, yet the question was on FIFO. Just because you understand AVCO, you don't understand FIFO, you go for AVCO. You'll be wasting your time. So drop that question, attempt another question. And this decision is made in your first 15 minutes reading time. The third mistake or pitfall is poor technical knowledge and failure to closely read the question. Always ensure each question you read it at least twice before you attempt it, so that you read the requirement at least twice, so that you don't poorly interpret the question. And then number four, and that is, it affects us. I'm teaching in some university somewhere, professional programs, and you find that students are not preparing adequately. Maybe after their class, they come and wait for the CPA classes to start. They don't even read for themselves. They wait for the lecturer to come and guide them through the revision. In professional exams, what the trainer does is just 10%. 90% is your own effort. In professional exams, you cannot pass by starting reading the last month. You must start reading from the beginning. In the last month, you use it to revise what you have already read. You cannot wait until the last minute is when you start revising. That is almost suicidal. The chance of passing will be almost close to zero. Make sure you start practicing from day one. Make sure that you are always thinking about those mistakes or those pitfalls during your revision. I'm not saying it's too late. There is still time, but make sure you manage your time effectively. At least ensure every day there is a topic you read and properly understand and attempt questions on it so that you are in a position to be comfortable in all topics. Now, out of your Icpar management accounting syllabus, which I've said has got 4 key areas. I said there is costing techniques. I said there is decision making. I said there was what is called budgetary control. And lastly, I said there is what we call standard costing. I've divided those 4 key areas into 14 key chapters. What are the 14 key chapters? Chapter number 1, I've called it Nature and Purpose of Cost and Management Accounting. Remember, we are not teaching, we are just reviewing, we are revising. We cannot teach these topics right now. Chapter number 2 is cost classification. You must know the 8 different ways to classify costs. You can classify costs by their elements, by their nature, by their function, by their behavior, by decision making, by influence of management, by nature of operations, etc. That is chapter number 2, cost classification. Chapter number 3, cost estimation. There are 2 key methods that are used to estimate costs in management accounting F2.1. Number 1, you must know how to estimate costs by using high-low method. And number 2, you must know how to, chapter number 3, you must know how to estimate cost by use of regression analysis. High-low method, and number 2, regression analysis. Regression analysis is also called least square method. Chapter number 4 is on materials. Materials, it's quite a wide, remember materials is an element of costs. Now in materials, what should you be familiar with? How do we classify materials? What is the material purchase procedure and documentation? What are the different stock levels? Stock levels here, I'm talking of economic order quantity, reorder level, maximum stock level, minimum stock level, total purchase cost, total ordering cost, total holding cost, number of orders, average stock, etc. That is under stock levels. You must also know stock valuation. Which are the methods under stock valuation? First in, first out, last in, first out, and average cost method. There is also what we call stock taking. Stock taking is the physical counting of the stock that you have, the physical counting of the stock that you have, and comparing it to what is in the stock records. There are 2 types of stock taking. There is what we call periodic stock taking, and there is what we call continuous stock taking. There is also what we call what do you call this? There is what we call holding cost of holding stock. You must know 5 different costs of holding stock: cost of storage and stores operation, insurance costs, etc. You must know all the costs of holding stock. Now, and then there is what we call accounting for materials. So materials is quite a wide area. The 2 key areas in materials which you must always know in any exams if materials was to be tested. You must know the stock levels and you must know stock valuation. Labor. Labor is the second element of costs. Now, under labor, you must know how to classify labor into direct and indirect. You must know how to account for labor, accounting treatment of labor. You must know what is overtime. Overtime is the extra time employees work. And how do we calculate overtime? Next, you must know what is called incentive schemes. Incentive schemes are bonuses. You must know a bonus called RO1 and you must know a bonus called HALSI. There is also what we call remuneration methods. Remuneration methods are the different ways to pay our employees. How do we pay our employees? That is remuneration. I'm just trying to summarize to enable me start questions. I cannot go deep into the syllabus. Remuneration methods are the different ways of paying our employees. Remember, you can pay your employees using what we call time-based remuneration methods, where you pay them according to the time they have worked. Or alternatively, there is what we call output-based. Output-based is also called piece work. Okay, so the remuneration methods, but there is also what we call labor turnover. Labor turnover is the rate at which employees are leaving a company, labor turnover. There is also what is called measurement of labor. There are three ratios that are normally used to measure labor. There is number one, what we call efficiency ratio. Number two, there is what we call capacity utilization ratio. And number three, there is what we call production volume. Allow me to increase the speed so that I start questions. Chapter number 6 is on overheads. Remember, overheads are indirect costs. You must know how to account for overheads. When accounting for overheads, there are 3 steps you follow. Step number 1 is what we call allocation and apportionment. Under allocation and apportionment, you must identify the overhead costs, and you must also identify the basis of apportionment of the overhead costs. You must identify the overhead costs and also identify the basis of apportionment of the overhead costs. That is step number 1. Step number 2 is called reapportionment. Reapportionment is also called secondary apportionment. Now, under reapportionment, there are 2 key methods of reapportionment you must know how to use. Number 1, there is what we call continuous apportionment method. Continuous apportionment method. A continuous apportionment method is also called repeated distribution method. So under reapportionment, you must know how to use continuous apportionment method, which is also called repeated distribution method. And the other method you must know how to use is called simultaneous equation method. Simultaneous equation method is also called algebraic method. So under reapportionment, you must know how to use repeated distribution, and you must know how to use simultaneous equation method. And then there is what we call overhead absorption. Remember, overhead absorbed is OAR times actual activity. Overhead absorbed is overhead absorption rate times actual activity. What is overhead absorption rate? It is budgeted overhead divided by budgeted activity. If I continue like that, we may not finish. Let me move further. There is also a topic that is common in exams called marginal costing and absorption costing. Now, this involves preparing a profit statement. Preparing a profit statement, and we look at it on Sunday, not today. Marginal costing and absorption costing. It involves preparing a profit statement, either using the concept of marginal costing or using the concept of absorption costing. Marginal costing is also known as variable costing. Absorption costing is also known as total costing. I'm repeating, marginal costing is also called variable costing. Absorption costing is also called total costing. Topic number 8 is activity-based costing. Now, activity-based costing is a costing technique that is used to calculate the cost per unit of a product or a service. We use this technique to calculate the cost per unit of a product or a service. When you want to calculate the cost per unit of a product or service, you can either use what we call absorption costing method, or you can use activity-based costing method. Either you can use absorption costing method or you can use activity-based costing method. Under absorption costing, you apportion overheads. You share overheads using labor hours or machine hours. I'm repeating, under absorption costing, overheads are shared out, are apportioned using labor hours or machine hours. On the other hand, under activity-based costing, overheads are shared out using what we call cost pools and cost drivers, using cost pools and cost drivers. The next chapter that you need to know is what we call cost volume profit analysis. Cost volume profit analysis. Now, under cost volume profit analysis, we also call it CVP analysis. You must know, number 1, how do we calculate contribution to sales ratio? Number 2, how do we calculate what is called break-even point. Break-even point in both units, break-even point in both units and value. Number 3, you must know how to calculate margin of safety in both units, percentage, and value. Units, percentage, and value. Number 4, you must know how to calculate what we call sales units to achieve target profit. I'm repeating. Under CVP analysis, number 1, you must know how to calculate what we call contribution to sales ratio. Number 2, you must know how to calculate break-even point. Number 3, you must know how to calculate margin of safety. And number 4, you must know how to get sales units to achieve target profit. But remember, you must also know how to plot the graphs. Which graphs? Break-even chart, and number 2, profit volume chart. I'm repeating. Which charts should you know how to prepare? Number 1, break-even chart, and number 2, profit volume chart. Chapter number 10 is decision making. Now, remember, decision making is a choice between alternatives. Under decision making, there are 3 key areas. There are 3 major areas. Number 1, you must know the difference between relevant costs and non-relevant costs. What are the characteristics of relevant costs? What are the characteristics of non-relevant costs? That is part 1. Part 2, you must know what we call make or buy decisions. Should we make a product or should we buy a product? Number 3, you must know how to make decisions when you have limiting factors. When you don't have enough resources, how do we make decisions? And then the other areas you need to know in this area of decision making is shut down decisions. Maybe there is a department that is not performing very well. Should we close it down? To close down a department is called to shut it down. And finally, you must know what is called outsourcing. Outsourcing and the factors to consider before you outsource. That is chapter number 10. Chapter number 11 is what we call job, batch, and service costing. So remember, when calculating the profit the business makes, we operate in 2 different industries. Either we are in the production industry or we are in the service industry. You must clearly know the differences between production and services. Now, under production industry, there are 3 costing methods that can be used under production industry. Number 1, there is what we call job costing. Number 2, there is what we call batch costing. And number 3, there is what we call process costing. Process costing is chapter number 12. Now, in process costing, you must know how to prepare basic process accounts, but May sitting was on basic process accounts. So you must know how to prepare basic process accounts, and you must also know how to prepare process accounts with work in progress. Basic was tested in May. So maybe, I'm just saying maybe, there can be a question on, if there is a question in process costing, there can be a question maybe on work in progress because May was tested last time. I don't know, but revise also on that, especially on work in progress. Because in May 2025, I think, if I'm not wrong, there was a question on basic process accounts. I'll recheck on that. Chapter number 13 is on budgeting. Now, budgeting is also a wide area of management accounting. You must know, why do we prepare budgets? Reasons for budgeting. Purpose for budgeting. Why is it important to prepare budgets? Number 2, you must know steps that are followed in budget making process. What are the steps that are followed in budget making process? Number 3, you must know what are functional budgets. Functional budgets are sales budget, production budget, materials budget, labor budgets, and overheads budget. I'm repeating. Functional budgets are sales budget, production budget, materials budget, labor budgets, and overheads budget. You must also know how to prepare a cash budget. You must also know how to prepare what is called a fixed or flexed budget. Fixed and flexed or flexible budget. Fixed and flexed or flexible budget. And there is also what we call approaches to budget making process. You must know what is a top-down budget, what is a bottom-up budget, what is zero-based budget, what is incremental budget, what is activity-based budgeting, etc. And what is continuous budget? Continuous budget is also called rolling budget. And you must also know how to prepare public sector budgets in the public sector. And finally, there is a topic called standard costing. Now, under standard costing, number one, you must know types of standards. There are 4 types of standards: ideal standards, attainable standards, current standards, and basic standards. You must know each of them. And then there is a wide area of standard costing called variances. Under variances, variances are classified into 5 groups. Number 1, there is sales variance. Number 2, there is materials variance. Number 3, there is labor variance. Number 4, there is variable overheads variance. And number 5, there is fixed overhead variance. So under sales variance, you must know how to calculate sales price variance and sales volume variance. Sales volume, remember, can be under marginal costing and absorption costing. Under materials variance, you must know how to calculate material price variance and material usage variance. Under labor variance, you must know how to calculate labor rate variance and labor efficiency variance. I'm repeating, under labor, you must know how to calculate labor rate variance and labor efficiency variance. Under variable overheads, you must know how to calculate variable overhead expenditure variance and variable overhead efficiency variance. And finally, under fixed overhead variances, you must know how to calculate fixed overhead expenditure variance, and you must know how to calculate fixed overhead volume variance. However, fixed overhead volume variance is again subdivided into 2: fixed overhead volume capacity variance and fixed overhead volume efficiency variance. So in summary, I've taken 15 minutes to 20 minutes to explain, to summarize each of the 14 major topics that we have in management accounting. So with that, and then Icpar will share with you these slides. Out of those 14 chapters, I've listed for you questions that you can revise in each of the chapters. In 8 hours, it's now remaining 7 hours. We cannot revise everything. So I've listed for you practice questions. For example, if it's chapter number 1, which questions can you revise in that area? If it is chapter number 2, which questions can you revise? I've listed for you there. For example, May 2024 question number 2, if you revise it, you will find its course classification. So I've listed for you questions that you can revise in each of the areas. Now, I'm now shifting to part 2 of our revision. Now, in the remainder of our time today and on Sunday, I want us to focus on the following areas. Today, I'll call it day 1, and on Sunday, I'll call it day 2. Because I've taken much time in explaining each of the topics, I may slightly adjust what I'm going to cover today. Today, my target is to cover standard costing. And the question that I'll be referring to is May 2024 question number 3. There is even May 2025 question number 1, but I'll be doing 1 question per topic. I cannot cover 2 questions because of time. So there is standard costing. Our focus will be May 2024 question number 3. Once we are done with standard costing, we'll go to process costing. And in process costing, I would want to focus on work in progress. So in process costing, I'll focus on May 2024 question number 7. You can practice on your own. Those students whom I teach have already covered May 2025. But if I've not taught you before, you can practice May 2025 on your own. Process costing. Number 3, we'll focus on activity-based costing. Number 4, which I may slightly change because of time. If I decide to look at budgeting, there are 3 types of budgets we'll look at. There is one August 2024, there is May 2024, and there is February 2024. August 2024 is on cash budget. May 2024 is on functional budgets. And February 2024 is on fixed and flexed budgets. So that is for today. Now, for on Sunday, it's important to attend also the session on Sunday. On Sunday, which I'll call day 2, I'll focus on 6 key areas. Number 1, I'll look at decision making. Number 2, I'll look at marginal costing and absorption costing. That is on Sunday. I'll look at job, batch, and service costing. I'll look at CVP analysis examples. I'll look at cost estimation. How do you tackle questions on that? And finally, I'll look at overheads. Any other topic, it's now upon you to revise. For example, I've not picked materials. You can revise it on your own. So that is the plan. That is what we call the teaching plan we are going to follow in this session and the next session. So day one, which is today, we look at standard costing, process costing, activity-based costing, and budgeting. But I may replace budgeting with decision making. We will see as we continue. And that brings us to the end of my first introduction. That was my introduction, and that was giving you a clear plan. How do you attempt? How do you prepare for exams? How do you answer exams questions? Which topics do we have in management accounting? And which topics are we going to revise in management accounting? Remember, if you have a question, you'll type in the questions and answers. Okay, whenever you see me quiet, it means I'm reading the charts. Whenever you see me, I'm quiet, I'm reading the chart. Whenever I'm quiet, I'm just reading the questions in your chat. If it is something relevant, I talk about it. Like the one somebody is talking of S3.2. We are in management accounting F2.1. We are not in S3.2. We are in F2.1. Although there is some relationship, you can still gain if you attend this session. So now, why don't you allow me to go to day one questions that we are to practice? And in day one questions, we said in day one, we are going to look at the following. Day one, we have said we are looking at standard costing, process costing, activity-based costing, and budgeting. So can you allow me to go to Excel to start covering the questions one by one? I'll share these slides with Icpar, and Icpar will share with you. So long as you are doing exams, Icpar has got your email address. If Icpar has got your email address, I'll share with them, and then they'll share with you. Now, let's go to standard costing. I believe you can see. Can somebody just type in the chat? I've muted everyone. We cannot talk. Can somebody type? Can you see the Excel sheet? Nope. Okay, let me bring it back. Can you now see it? Is it now visible? I think it should be. So that we move on. Okay, thank you, thank you, thank you. So if you have your past papers, although I'm still going to project it, let's look at variances, a question on variances. And I want to focus on May 2024, question number 3. May 2024, question number 3. May 2024 was last year, question number 3. So the question reads, the following data, if you have the past paper, you can open it. The following data, we want to see how do we answer questions on standard costing. The following data relates to Kayunga Company Limited for the year ended 31st December 2021. You have been given the budgeted results. Direct materials purchased were 50,000 kgs at 80 francs per kg. Direct labor was 60,000 hours at 70 per labor hour. Variable production overheads was 60,000 hours, again at 50 per hour. Fixed production overheads was 1 million, and budgeted production was 100,000 units. Actual results has also been given. Now, in the actual results that you have been given, direct materials, direct labor, variable, fixed, and that. Now required, calculate the following variances. So what I'll do, I don't know if we were given sales. Let me see, direct material, direct labor, variable, fixed, budgeted production. You are not given sales. So we cannot sales. I'm just trying to recheck again. Were you given selling price anywhere? No. So you cannot be asked sales here because sales was not given. So the variances you are being asked: material price variance, material usage variance, labor rate variance, labor efficiency variance, variable overhead efficiency. And now, based on this question, solution to it. So when we are solving the question, number one, you have been asked, just a second. Just a second, I just want to make it. Okay. Number one, you have been asked material price variance. Material price variance. Now, if you've been given a question on material price variance, I'll call it MPV. If you've been asked a question on material price variance, number one, you must know the formula. What is the formula for material price variance? The formula for material price variance is normally budgeted price per kg. Our materials here is measured in kgs. So budgeted price per kg minus actual price per kg. And then outside the bracket, you multiply everything times actual quantity. Actual quantity in kg. So that is the formula that you have for material price variance. Now, what is your budgeted price per kg? Budgeted price per kg. So your budgeted price per kg in this context, you come to your budgeted information. Material purchases were 50,000 kgs at 80 per kg. So your budgeted price per kg is 80, of course, per kg. And then you come and find what is your actual price per kg. What is your actual price per kg? You come here and check here, actual performance. Direct materials was at 85. So your actual price per kg is 85. So what is remaining to make it complete is actual quantity. What is your actual quantity? Actual quantity. So what's your actual quantity in this question? You can see here, direct materials, actual performance. Direct materials is 48,000 kgs. So you come here and have 48,000 kgs. So with that, we can now come and calculate the variance. We can say, we can come and have it. Material price variance is therefore equals to budgeted price is 80 minus actual price is 85. And then outside the bracket, you multiply it by actual quantity, which is 48,000. So with that, you should be in a position now to get your answer. So what is our answer based on that? So always start with the higher value to avoid a negative. 85 minus 80, and then you multiply by 48. So it gives you 240,000. Now, how do you interpret the variance? You had budgeted to buy your materials at a price of 80. You actually spent more. You spent 85. So you spent more than what you had budgeted. If you spend more than what you had budgeted, it is adverse. Variances can either be favorable or adverse. And that is the first variance that you are asked. Material price variance. You come to number two, material usage variance. How do we calculate material usage variance? Now, I'm just guiding you on how to answer questions on variances. Material usage variance is equals to, the formula is normally budgeted quantity for actual production, you minus actual quantity. If you have a pen, you can note them down. And then outside the bracket, you multiply. Outside the bracket, you multiply by budgeted price. Budgeted price per kg. I'm repeating, material usage variance. The formula is budgeted quantity for actual production minus actual quantity minus actual quantity times budgeted price per kg times budgeted price per kg. Now, what is this budgeted quantity for actual production? Budgeted quantity for actual production is budgeted quantity per unit, and then you multiply it by actual production units. That is what gives you budgeted quantity for actual production. Budgeted quantity for actual production is budgeted quantity per unit times actual production unit. So let's get it. Budgeted quantity for actual production is equals to, we go to the question. Oh, we don't have budgeted quantity per unit. We'll have to calculate it. So let me calculate it. Budgeted quantity per unit. Budgeted quantity per unit is not given. 50,000 is not per unit. 50,000 is for all the 100,000 units. So budgeted quantity per unit will be 50,000 kgs. You divide by the number of units is 100,000 units. You divide by 100,000 units. So that gives you the budgeted quantity for actual production. So that one gives you 50,000 divided by 100,000. So it gives you 0.5, of course, kgs. That is budgeted quantity per unit. Now, what is your actual production units? Your actual production units is given here. Actual production is 90,000 units. Actual production is 90,000 units. So with that, we can now get budgeted quantity for actual production. So we can get BQAP is equals to, BQAP will be equal to 0.5 kgs times 90,000 units. 90,000 units. So our budgeted quantity for actual production, in short, is equals to 0.5 times 90,000. 90,000. So it gives you 45,000 kgs. So once you've gotten the first part, budgeted quantity for actual production, next you need to look for actual quantity. Now, actual quantity is equals to, our actual materials is 48,000 kgs. Actual quantity is equals to 48,000 kgs. And then now what else do we need? Budgeted quantity for actual production. We have actual quantity. We next need budgeted price per kg. Budgeted price per kg. Budgeted price per kg. We had already found it earlier. So the budgeted price per kg was 80. We had already found it earlier. So with that, we can now get material usage variance is therefore equals to 45,000 is the budgeted quantity for actual production minus 48,000 is the actual quantity, close the bracket, multiply by 80. So it gives you a certain answer. So what answer does it give you? 40 minus 45, close the bracket, times 80. So what we get is 240,000. Again, by coincidence, it does not mean it's the same. It is just by coincidence that it is the same. So we get 240,000. We had budgeted to use 45,000 kgs. We had budgeted to use 45,000 kgs. We actually used 48,000 kgs. We actually used 48,000 kgs. So that we used more than what we had budgeted. The variance is again adverse because you spent more than what you had budgeted. You spent more than what you had budgeted. You spent more than you are budgeted. So that is requirement 2. Requirement 2 was material usage variance in this question. Next, we have labor rate variance. Number 3, labor rate variance. I'll be checking questions when I finish. Don't worry about that. So labor rate variance, the formula for labor rate variance is normally equals to budgeted rate per hour minus actual rate per hour times actual hours. I'm again repeating. Labor rate variance, the formula is budgeted rate per hour minus actual rate per hour times actual hours times actual hours. So what is our budgeted rate per hour? Budgeted rate per hour. What is our budgeted rate per hour? We come to labor cost 60,000 at 70 per hour. So budgeted rate per hour is 70. Okay. Actual rate per hour. Actual rate per hour. Is it given? We come down here. Direct labor costs 65 per hour. Actual, this is actual, 65 per hour. So actual is 65. And then you look for actual hours, actual hours. So our actual hours is not given, we can find it. Actual hours. So our actual hours was not given, so let's calculate it. Here you have direct labor costs 65 per hour, and the total amount is 3,770,000. So when you take 3,770,000, you divide by 65, it gives you the actual hours. So that gives you 3,770,000 divide by 65. That should give you the actual hours. That gives you the actual hours. So what are your actual hours? Your actual hours are 3770000 divided by 65. So it gives us actual hours are 58,000. So we have everything that we need. So labor rate variance is equals to budgeted rate per hour is 70 minus actual rate per hour is 65, and then you multiply by actual hours is 58,000. So what do we get as a result of that? So what we get is, let's do it, 70 minus 65, close the bracket, you multiply by 58. What you get is 290,000. Let's reason it out. We had budgeted to pay our employees at a rate of 70. We paid them at a rate of 65. Therefore, we saved something. We gained. So if you save something, it is favorable. Remember, variances can either be favorable or adverse. When you gain, it is favorable. When you lose, it is adverse. That is labor rate variance, according to what the examiner asked there. Next, we have labor efficiency variance. That is number 4. Labor efficiency variance. So labor efficiency variance, LEV. Now, labor efficiency variance, the formula is very close to materials usage. So it will be budgeted hours for actual production minus actual hours, close the bracket, times budgeted rate per hour. I'm repeating. Labor efficiency variance, the formula is budgeted hours for actual production minus actual hours times budgeted rate per hour times budgeted rate per hour. Now, let's go step by step. What is budgeted hours for actual production? You'll start by getting budgeted hours per unit. Budgeted hours per unit. I don't think it was given, so we'll have to look for it. We were not given budgeted hours per unit. You were just told total hours is 60,000 in 100,000 units. So you will take, in this case, if you want to get it, you will take 60,000 hours, you divide by 100,000 units. So that will give you a certain figure. So what does it give you? It gives you 60,000 divided by 100,000. 60,000 divided by 100,000, whatever value it gives you. I think it gives you 0.6. 0.6. Now, what is your actual production units? Actual production units. Your actual production units is 90,000 units. Actual production units is 90,000 units. So what is the budgeted hours for actual production times actual production? Budgeted hours for actual production is equals to 0.6, of course, times 90,000. So that gives you budgeted hours for actual production. So we have said it is 0.6 times 90,000. So our budget, what is not happening? Yeah, it gives you 54,000 hours. And then we've got the budgeted hours for actual production. Next, we get the actual hours. Actual hours were we given? If we were not given, we calculate. Direct labor costs these at that. So actual, oh, we had already calculated it. At least easier. We had already calculated it here. You remember there? So that I can also bring these here. We had already calculated it. We don't need to repeat it here. So actual hours is that. And then budgeted rate is also already there. Budgeted rate per hour. Budgeted rate per hour. We already also have it. So budgeted rate per hour is 70. So with that, we can now get the variance. So labor efficiency variance is therefore equals to 54,000 minus 58,000 times 70. So what do we get? So we have here times that. So what we get is 280,000. Let's reason out on the variance interpretation. We had budgeted to use 54,000 hours. We actually used more than what we budgeted. So if you spent more than what you budgeted, it is adverse. You used more. So the variance becomes adverse because you used more than what you had budgeted for. That is labor efficiency variance. Labor efficiency variance. Finally, number 5, not finally really, number 5, you are asked all variable overhead efficiency variance and also variable overhead expenditure. So variable overhead efficiency variance. So variable overhead efficiency variance, the formula is the same as labor, the labor efficiency variance. I'm repeating, variable overhead efficiency variance, the formula is the same as labor efficiency variance. So to save much time, I'll go to the labor efficiency variance. Remember, that was the formula. I can come and paste it there. And I just change this to variable overhead efficiency. I've just picked the labor formula, but of course the variable is different. Labor formula is that. So what is the variable overhead efficiency? They share the same formula with labor, but of course the figures are different because variable is different from labor, but the formula is the same. I'm repeating, variable overhead efficiency variance. The formula is budgeted hours for actual production minus actual hours times budgeted rate per hour. So let's just go step by step. Let's get the budgeted rate per hour. Not budgeted, sorry, I mean budgeted hours per unit. So our budgeted hours per unit variable Let's see if it is different. You can see here variable. Variable budgeted. Sorry, is it budgeted? I hope I did not make the mistake also here. Yeah, it's okay. Here is variable. Variable production overhead is 60,000 at 50 at 50. You can see this, 50. So when I take 60,000, I divide by 100,000, it gives you me the budgeted hours per unit. So it is 60,000 hours divided by 100,000 units. It gives me the budgeted hours per unit. So 60,000 divided by 100,000, it gives me 0.6. Actual production units does not change. Actual production units does not change. So our actual production units remains as 90,000 throughout. Okay, now what is our budgeted hours for actual production? Budgeted hours times actual production is equals to 0.6 times 90,000. So what do we get? We get 0.6 times 90,000. So we get 54,000 hours. By coincidence, they are the same. Okay, actual hours. So what are our actual hours? We go and check in the question. Variable production overheads was this, 45 per hour, and this was 2,610,000. So the actual hours is different. So you'll take 2,610,000. If you divide by 45, it gives you the actual hours variable. 2610 divided by 46. 2610, 1, 2, 3, divide by, is it 45? I'll just recheck. Yes, 2610 divided by 45. It gives me the actual hours. So 2610 divided by 45. It gives me 58. It gives me 50. Okay, 58. Now, finally, we have budgeted rate per hour. Budgeted rate per hour. Variable. Budgeted rate per hour variable. We come here. Variable production was this, and the rate was 50. You can see 50. The rate is 50. The rate is 50. So we can come and now get the variance. Variable overhead efficiency variance is equals to, we'll have 54,000 minus 58,000, close the bracket, multiply by 50. So what does that give you? It gives you 58 minus 54, close the bracket, multiply by 50. The variance is 200,000. We had budgeted to use 54,000. We used more. Therefore, the variance is adverse because we spent more. And the last variance from this question was, that was variable overhead. The last one was variable overhead expenditure. Number 6. Variable overhead expenditure. Expenditure variance. So what is the formula? They share the same formula as labor rate. The formula is the same as labor rate. So I'll come and pick the labor rate formula just to confirm that it is the same. And then I post there, but I change it to variable. Instead of labor rate, now I change it to variable overhead expenditure variance. I change it to variable overhead expenditure variance. And then I just pick figures one by one. I start with what is the budgeted variable rate per hour? Variable rate per hour budgeted. Variable per hour is 50. You can see the 50. Variable per hour is 50. Sorry, 50. What is the actual rate per hour? Actual rate per hour. Our actual rate per hour, is it given? If it's not given, we calculate. Our actual rate per hour is 45. You can see 45. 45 per hour. Our actual rate per hour is 45. And then our actual hours, we have already calculated it. Our actual hours, we have already calculated actual hours as 58,000. So let me just bring it. How did we get 58? 58,000. So this can give us variable overhead expenditure variance is equals to 50 minus 45, close the bracket, times 58,000. So what do we have? Here we have 50 minus 45, close the bracket, times 58,000. It gives you 290,000. We had budgeted to spend 50, we spent less. So if you spent less, it is favorable. If you spent less, it is favorable. Now, if you have a question on variances, that is how you can answer questions on variances. Now, the honors is now on you to practice the remaining. So that is how you are asked. Now, part B of the question, theory, I'll just talk. I'll not type anything on theory. Explain the following terms as used in standard costing. There is what we call attainable standards. There is what we call ideal standards. There is what we call current standard, and there is what we call basic standard. So maybe explain. These ones, I think you can find them if you explain on your own. Attainable standard is a standard based on efficient, a standard prepared based on efficient but not perfect operating conditions. I'm repeating. Attainable standard is a standard prepared based on efficient but not perfect operating condition. A standard prepared based on efficient but not perfect operating conditions. What is an ideal standard? An ideal standard is a standard that is prepared based on perfect operating conditions. A standard prepared based on perfect operating condition. A standard prepared based on perfect operating condition. What is a current standard? A standard that is based on the current level of efficiency. In other words, it provides for changes in prices. A standard that is based on current level of efficiency. When prices change, the standard also changes. And finally, basic standard is a long-term standard that remains unchanged. Long-term standard that remains unchanged. Long-term standard that remains unchanged. Remember, current standard is a standard that changes to reflect changes in operating environment. Current is a standard that changes to reflect changes in operating environment. Standard costing, as I leave that area, standard costing is a very important area, is a very important aspect of your syllabus. It's one of the 4 key areas of your syllabus. That's why it's a very common. Just analyze the last 10 past papers. You find that out of the last 10 sittings, maybe it has been tested 9 times out of 10 times. So it's a very common area in exams. Make sure you understand all the variances. Make sure you understand all the variances. Okay, somebody's, Elise, you're asking, can you repeat attainable standard? Attainable standard is a standard based on efficient but not perfect operating conditions. A standard that is based on efficient but not perfect operating conditions. A standard based on efficient but not perfect operating conditions. So I think, Elise, is it now okay? Elisa? Irakoze? Can we now move on? Okay, thank you. So that is standard costing. Please, now it's the honors is on you to practice, practice, practice. Yeah, these ones you can get in your notes. Theory part, mgeni. Ideal standard is a standard based on perfect operating conditions. A standard that is based on perfect operating conditions. Standard based on perfect operating conditions is ideal standard. Mgeni, is it answered? Standard based on perfect operating condition. Okay, now let's move on. We cannot remain there forever. We want to pick another key area of your syllabus. I want us to, first of all, go to activity-based costing before we go to process costing, so that I'll be in a position to give you some short break after activity-based costing. So let's go to activity-based costing before we go to process costing. Showing us all answer calculation. What is that you're saying? Icpar will share with you this Excel sheet. Icpar will share with you this Excel sheet, so you should not worry about that. Icpar will share. If I leave you to write, it may take a lot of time. So can you just allow me to move on to the next question, please? Icpar will share with you this Excel sheet. I'll share it with Icpar, and then Icpar will email each one of you. Is that clear? Can we move on? Can you just type so that we know we should move on? Can we move on to the next area, please? Okay, so I want us next to focus on activity-based costing. It's an important aspect of your syllabus, so let me go to it. And I'll pick May 2024. Remember, I gave you a number of questions, but I've decided to pick May 2024, question number 6. May 2024, question number 6. May 2024, question number 6. So the question reads, if you have the past paper, you can open it. The question reads, Vision 2020 Limited was recently registered and started its operations in the year 2020. I'm repeating, Vision 2020 Limited was recently registered and started its operations in the year 2020. The company is based in Kigali Special Economic Zone and makes clothes. In the year 2020, the cost accountant used the traditional method of absorbing production overheads to cost units. Now, the traditional method is called absorption costing. The traditional method is called absorption costing. We continue. In the year 2021, he shifted from traditional method. Remember, traditional is absorption costing of absorbing overheads using labor hours to activity-based costing. Remember, under traditional, you can either use labor hours or machine hours. But in most cases, somebody called Benon, please, you are interfering with the class. Stop whatever you are doing. You are interfering with the screen. I don't know in what way. You are just drawing on our screen. It's making our screen dirty. So in the year 2021, he shifted from traditional method of absorbing overheads using labor hours to activity-based costing. The following cost data was for the year 2021. Production cost per unit for each product. We have material X, material Y, and material Z. Direct material cost per unit is given. Direct labor cost per unit is also given. Production units is given, and labor hours per unit is also given. Machine hours is also given. Additional information. Additional information. The total production overheads was 18,850,000. For the purpose of activity-based costing, as a basis of absorbing overheads, the following details are provided. For the purpose of activity-based costing, as a basis of absorbing overheads, the following details are provided. The following details are provided. Machine costs, material handling, we have setup costs required. So let's carefully read the requirements. Number 1, A, calculate the cost per unit using traditional method of absorbing overheads on the basis of labor hours. So calculate cost per unit using traditional method. Remember, traditional method is also called absorption costing. Requirement number B, explain 6 steps followed in calculation of cost per unit under activity-based costing. That is theoretical. I may skip it because you must know the steps followed when you want to calculate. You must identify the cost pool, you must identify the cost driver, you must know how to calculate data on each cost driver, etc. The last step is to calculate the overhead cost per unit. The last step is to calculate the overhead cost per unit. So I'll go to part number C. Calculate the cost per unit using activity. Now, when I'm answering part C, I will be explaining also part B. When I'm answering part C, I'll be following the steps of part B. Calculate the cost per unit using activity-based costing method of absorbing overheads. Okay, now to answer this question, the question is on activity-based costing versus absorption costing. Requirement, so in our solution, to the question, requirement A is asking us to calculate the cost per unit. And which method are we using? Traditional method. Traditional method is also called absorption costing. Absorption costing method. Traditional method is also under this. Okay, so under this method, under AC, overheads are apportioned using what we call, okay, I'll explain that at the end. Let me just go straight to cost per unit. I'll explain it later on in the right place. So we are being told the products we are making are X, we are making product Y, and we are making product Z. So those are the 3 products we are making. Now, in order to get the cost per unit, remember that is what we are calculating, cost per unit. In order to get the cost per unit, remember our currency is Rwandese francs. That is our currency. In order to get, we'll start with direct materials. Direct material cost per unit. Cost per unit. So what is our direct material cost per unit? 100, 80, and 60. We've been given 100, we've been given 80, and we have been given 60. That is material cost. Labor cost has also been given. So next, direct labor cost per unit. So what is our direct labor cost per unit? 80, 60, and 45. So there is 80, there is 60, and there is 45. I hope we are clear up to there. So we have, now when you add these two, it gives you what we call prime cost, or what we call direct cost. This gives you direct cost per unit. Direct cost is also called what? Prime cost. Prime cost per unit. So what is our prime cost per unit? Our prime cost per unit is equals to 100 plus 80. 100 plus 80 is 180. So we have that. So 180, 140, and 105. And then after that, you come and look for overhead cost per unit. You come and add overhead cost per unit. Now here is where you'll now have your working. I'll come and have my working 1. So there will be a working there. And then this will give you the total cost per unit. Cost per unit when you add everything. So when you add everything, it gives you cost per unit. Now, let's be attentive. So I'll come here and have my working 1. My working 1 enables me get the overhead cost per unit under AC. AC method is also called what? Traditional method. So my overhead cost per unit, that is what I want to find. What is my overhead cost per unit under AC? So under AC, so we can say under AC, overheads are apportioned. Apportionment means to share out using labor hours. Overheads are apportioned using labor hours. So I'll first of all get what is the total production overheads. Let me just call it production. Total production overheads. What is my total production overhead? You can see here, additional point number 1. The total production overhead was 18,850,000. 18 million, is that okay? 18,850,000. 18,850,000. Now, please get me right. We want to share this 18,850,000 to product X, Y, and Z. I'm repeating. What do we want to do? This 18,850,000 is what was spent in the whole year to make 125,000 units of X, to make 80,000 units of Y, and to make 60,000 units of Z. So we want to share this 18 million to each of the products so that we get the overhead cost per unit. And we have said under AC, we share this amount using labor hours. So therefore, I'll need to get what is my total labor hours. I'll need to get my total labor hours. And to get the total labor hours, we have product X, we have product Y, and we have product Z. Now, I'll start by finding what are the hours per unit. Once I've known the hours per unit, I'll need to know what are the total production units, and that will enable me to get the total hours. I'm repeating, hours per unit is given. Hours per unit is 8, 6, and 10. 8, 6, and 10. Hours, labor hours required per unit. Production units, we have 125,000, we have 80,000, and we have 60,000. Okay. Total hours used is 8 times 125. So it is 1,480,000 and that. So what does that give us? This gives us the total labor hours. Total labor hours. So what are our total labor hours? Our total labor hours is equals to 1 million plus 480,000 plus 600,000. It gives you the total labor hours is that. Let me explain. How did we get the total production hours? You mean the total production hours or total production overheads? I think you mean the total production overheads. It is in the question here. 18,850,000. 18 million. I hope I've answered you. Let's move on. Now we are sharing 18,850,000 to product X, Y, and Z using the ratio of labor hours. We are using the ratio of labor hours. Using the ratio of labor hours. We are using the ratio of labor hours. Now, what goes to product X? So I'll start with what is the overhead costs? I can just do them here. Yes, let me just do it here. Let me just do it here. So what is the total overhead? I can just do it here so that I save space. What is the total overhead? Okay. What is the total overhead? So what you okay, let me just bring it down here. There is no need of squeezing the space. So I'll need to get overhead cost of product X. So how do we get the overhead cost of product X? Let's be keen here. Look at what I'm doing. To get the overhead cost of product X, I'm doing this. Overhead cost of product X. I'll take 1 million hours over the total times 18 million. So I'll take 100,000 divide by the total is 2080. Janvi, you are interfering with us. Stop typing whatever you are typing on your screen. And then you multiply Janvi, please, times, or you'll be removed from the session. So times 18,850,000. I will re-explain, don't worry. Janvi, you are interfering with the session. You please stop whatever you are typing. You are making our screen dirty. If you continue, I'll disconnect you. You are making my screen dirty. Okay, let's continue. So what I'm saying that the total overhead cost is 18 million. What goes to X, what goes to Y, what goes to Z? The total hours for X is 1 million out of 2 million. So you take 1 million out of 2 million times the 18 million. It gives you the overhead cost. It gives you the overhead cost of this first product of X. So it gives you the overhead cost of X. So that gives you 1 million over the total 2 million times 18 million. So it gives you whatever value it gives you. I can scroll that. It gives you 9 million. But I can get the overhead cost per unit. So to get per unit, you will take the 9 million that we have calculated. You will take the 9 million you have calculated, 9062,500, you divide by the number of units. What are the number of units of X? 125,000 units. You can see here, production units is 125. So if you divide by the number of units, 125,000 units, it gives you the overhead cost per unit. So what is that? Is that divided by 125,000. It gives you 73. Maybe to 2 decimal places. So 72. So this 72 is what you bring here as your working one. So it gives you 72.5. 72 working one. We repeat the same for working two. So we repeat the same for, so this is overhead cost for X. So we repeat for Y the same. Overhead cost of Y. We repeat the same process we have done for Y. What is the process we have followed? Remember, we took 1 million over 2 million. So this time we'll take 480 over 2 million. So we'll take 480,000. 480,000 over 2,080,000, close the bracket, times 18,850,000. You give me your answer down here. So what answer do we get down here? It is 480 over the total, close the bracket, times the 18 million. So it gives you 4 million Now with that, the same way, we get the overhead cost per unit. Overhead costs per unit of Y. So the overhead cost per unit of Y, the same concept. The number of units is 80,000. So what do? You come and have it here, 4,350,000 divided by 80,000 units. What does it give you? 4 million divided by 80,000 units. What does it give you? 54. Maybe to two decimal places. 54. And I can highlight it. 54. So I come and pick it there. 54. So overhead cost per unit, this was of X. Okay. So we are done with of X, of Y. So let's go to of Z. Overhead costs of Z. Overhead costs of Z. So what is our overhead cost of Z? Again, we repeat the same process. So it is now 600,000. 600,000 divided by 2,080,000 times 18,850,000. You get your answer. What answer do we get here? We are saying 600 divided by that times 18 million. So it gives you 5 million. So overhead cost per unit, overhead cost per unit of Z is equals to 5,437,500. I divide by the number of units is 60,000. I divide by 60,000 units. So if I divide by 60,000 units, it is that divide by 60,000 units. It gives you 91, maybe to two decimal places, 90.63. So that is 90.63. So I come and bring it there. So 90.63. So that is 90.63. So finally, I get the total cost per unit. It is direct cost plus overheads. Direct cost plus overheads. And that is what gives you the cost per unit. That gives you the cost per unit using which method? Cost per unit using traditional method. So that's how we get the cost per unit using traditional method. So using traditional method, that's how we get it. Maybe I can highlight it here. I can highlight it here so that it's very clear. I can highlight that cost per unit using traditional method. So can I go to the next one before I give you a short break? So B, or I'll have the next one, I'll have as cost per, so that we are in a position to compare. Cost per unit using activity based, so that you can compare like with like. Cost per unit using activity based costing. Cost per unit using activity based costing. So let me copy these so that I save time. I'll copy that. So let me copy this so that I save time. So I'm just copying this so that I save time. Now, I'll remove that, and that, so that we have working two. Working two. So working two is to calculate the overhead. Please, let's be attentive here. Overhead cost per unit, but under which technique? Activity-based costing. Overhead cost per unit under activity-based costing. Now, under activity-based costing, so we can say under ABC, ABC represents activity-based costing, overheads are apportioned, not using labor hours. We don't use labor hours, using what we call cost pools and cost drivers. Using cost pools and cost drivers. Overheads are apportioned using cost pools and cost drivers. So what is a cost pool? Cost pool is an activity that consumes resources. I will be giving you examples later on. Cost driver is a unit of activity. The other one is activity, but this one now is unit. Activity, unit of activity that consumes resources. In a layman's language, in an ordinary language, it is the basis of apportionment. Basis of apportionment of cost pool in a layman's language, in the normal language. Cost driver is the basis of apportionment. So in order to answer that question, we will need to know what is our cost pool. We will need to know what is our cost driver. We will need to know what is our total amount. And then for each product X, product Y, and product Z, we get the cost in each. Product Z. Product Z. So this is what you need in order to calculate the cost per unit. This is what you need in order. Now, you go to the question. Can you allow me, because of space, I hide this? In case I forget to unhide it, you can unhide it. I'm hiding whatever part we have already covered. It's not hiding itself. Let me hide it. So I've hidden that to enable me have room to move around. So I've hidden that. Now, what is our cost pools? These overheads are our cost pool. The first cost pool is what we call machining cost. Machining cost. Our second cost pool is what we call material handling. Material handling cost. I'm just keeping some spaces. And the third one is what I call setup costs. I'm not guessing. These are in the question. So these are the overheads. These overheads are the cost pools. Okay. The cost driver of machining cost is machine hours. The cost driver is machine hours. The cost driver of material handling is number of orders. And the cost driver for setup is number of setups. That makes it even more interesting. Remember, what is your total overhead cost? Total production overhead. You already know it as The total production overhead, we got it as 18,850,000. 18,850,000. Now, we want to share this 18 million, please understand me, 850 using these percentages. 50% goes to machining cost, 30%. So look at what I'm doing here. The amount there, what I'm doing is equal to 50% times this 18 million. It gives me 9 million. Here, I also bring it 30%. 30% times 18 million. It's 5 million. And lastly here, 20% times 18. I will repeat, don't worry. I'm repeating. The allocation of overhead costs is using this formula. 50% goes to machining costs, 30% goes to material handling, and 20% goes to setup. That is what I've done here. I've said 50% times 18.85 million. I'm just abbreviating. This other one is 30% times 18.85 million. That is 18.85 is 18,850,000. I hope you know that. And 20% times 18.85 million. So that is what I've done there. And we have got the values there. Those are the values we have got. Those are the values that we have got. Those are the values that we have got. So far, so good. Let me put it in a table form so that it's very clear. I'm putting it in a tabular form. So in a tabular form, maybe I use this. I'm just trying to make the work presentable so that you can easily follow it. So when I use boxes, you can clearly see what is in each box. I hope you can clearly see how we got this amount, how we got that amount. Now, and this is where the point is. Now we want to share these 9 million to product X, Y, and Z using machine hours. So we will use machine hours. So we will use machine hours, which is given. We want to share 5 million using number of orders. And we want to share 3 million using number of setups. What if percentage is not given? If percentage is not given, you'll be given the actual amount. You'll be told if percentage is not, I'm just answering questions in the chat. Think they are always there. No, sometimes it is not there. So if percentage is not given, you'll be told machining cost is 9,450 for 9,425. So if percentage is not given, you'll be given that amount. If percentage is not given, you'll be given that amount. Mgeni, I hope we are together. If this is not given, if percentage is not given, you'll be given that amount. So either you are given the amount or you are given the percentage. I hope I've answered you. Okay, so here I'll have total overhead costs, and then I'll have production units, and then I'll have overhead cost per unit, and we'll be done with that question. So if we can get this, we'll be done with that question, but of course, it's not gotten in a straightforward way. Can I just post what we already have so that I save time? Production units was 125, 80, and 60. Production units was 125,000, 80,000, and 60,000. Okay, now unfortunately, I'll have to get these totals. They were not given, so that will give me a lot of work. These machining costs, so machine hours, number of orders, and number of setups. So you are not given, so I must get them. So machine hours, number of orders, and number of setups. We were not given the totals, so I must get the totals. So I'll have my X, I'll have my Y, I'll have my Z, and then I'll have the total. I'm doing that because we were not given the total. In another question, you'll be given the total, so it will be easy. This question, we were not given the totals, so I must get the totals. Huh? So machine hours, 350, 200, and 150. 350, 200,000, and 150,000. I'm just copying and pasting these. 180, 140, 100. 180, 140, and 100. And the last one, number of setups is 120, 160. 120, 160. Now I have everything to enable me answer the question. So these, remember, these are the cost drivers. These are the cost drivers. Okay, cost drivers. The people interfering with the screen, they are interfering with our work is not neat because of. So what are the totals? The total machine hours is that plus 150. That's the total machine hours. The total number of orders is also there for 20, and the total number of setups is that. So take note of that. Let me highlight it in a different color. Now, please note that we are finalizing. We want to share these 9 million to product X, Y, and Z using machine hours. And you know the machine hours for X is 350, for Y is that, and for Z is that. So what you do, you just come here, and I have my value here. I'll just pick, I come down here and take 350 over 700 times the amount I want to apportion, 9 million. That goes to X. I'm repeating, 350 is the number of hours for X over the total times the amount. For Y, if you have understood, it is 200 over the total times the amount we want to apportion. It gives you that. And for Z is 150 divided by the total times the amount we want to apportion. It gives you that value. We are done with machining cost. So machining cost for X was 4 million, for Y was 2 million, and this was also 2 million. We come to material handling cost. Material handling cost, we use number of orders. So number of orders over the total orders times the cost we want to apportion. It gives you that, 2 million. The next one also the same, 140 over the total times the 5 million. It gives you an amount. The last one is 100 over the total times the amount we want to apportion is 5 million. So we have apportioned that. Finally, setup cost, we use number of setups. So what are our number of setups? So our number of setups are 120 over the total times the 3 millions that. The second one is 100 over the total times the same amount. And the last one is, was it 60 over the total times the amount is 3 million. So we have everything that we need. So what is our total overheads? I bring it here. What is your total overheads? Your total overheads are the 4 million for X, the 2 million for X, and the 1.6 million. That is the total for that. And then I just scroll to the end. It gives you these 5 million is this plus that plus that. Now, when you take the total divide by number of units, it gives you the overhead cost per unit. So the total overhead divide by the number of units, it gives you the overhead cost per unit. It gives you the overhead cost per unit. So, and then to maybe 2 decimal places, to 2 decimal places. And we are done. So this gives you the answer we are looking for, and we bring it here. So working 2x is 70. This is 74. And the last one is 69. I'm again repeating, I'll share these workings with Icpar. Icpar will share with you. So that is activity-based costing. How do we account for absorption costing, and how do we account for activity-based costing? So I can open what I had hidden. Remember, I had hidden the cost per unit. I had hidden this. That was under absorption costing. And this other one is under, this other one is under activity-based costing. Under activity-based costing. I think at this moment, so that I don't overload you with information, let's have a short break. Don't log out, please. Don't log out. Just stretch out of where we are, because we must finish at 9. Don't log out. Please just stretch out of where we are for just 10 minutes, and then we come back and we'll continue up to 9 sharp. Just stretch out for 10 minutes. Please don't log out. If you log out, you may struggle to join. Let's just have a 10 minutes break, health break. Just stretch out of walk somewhere, and then you come back so that we go and revise other questions on budgeting and limiting factors. That is the next area we are having after the break. So let's just have some health break. Let's have some small health break, and then we come back. Some small 10 minutes break. We come back at 7:15. Please don't log out. Some small health break. We come back at 7:15. Don't log out. I'm really stressing that. Don't log out. Don't log out. Just some small health break. Our break is up, so let's continue. If you can see the Excel sheet, allow me to continue. Can you just type a response in the chat? Can you see the Excel sheet so that we continue? You cannot see the Excel sheet? Okay, let me try resharing it again. Is it now visible? Okay, I think now it's visible. We can now continue. Okay, fine. Now, I'm picking the major topics, and as you can see now, I want us to go to a very important topic called process costing. So that's the next one I want to focus on, process costing. Now, in process costing, I'll focus on I want to look at process costing with work in progress. Process costing, because that's the most complex process costing anyway. I'll not focus on basic process costing because it was tested last time. So I want to focus on process costing with work in progress. I'm seeing some question that can you show us the logic behind using simultaneous equation method if it can be applied to this question? No, a simultaneous equation is not applied in activity-based costing. I know what is confusing you. Simultaneous equation is applied in the topic overheads. Overheads as a topic, not calculating cost per unit. Simultaneous equation method is applied in overheads as a topic. Remember, there is a topic called overheads where there is allocation and apportionment, reapportionment, and overhead absorption. So simultaneous equation is applied under reapportionment. Emma, I hope I've answered you. It is not in activity-based costing. It is under the topic overheads as a topic. And it comes under step 2. What is step 2? Reapportionment. What is reapportionment? Reapportionment is the transfer of service department overheads to the production department. That's another topic. It is not activity-based costing. Emma, I hope you are okay in the question you have asked. I'm just looking at the questions that were asked just before the break. I think the rest are okay. So let's continue. Now, what I was saying now, I'm going to process costing. It's an important topic. Let's really focus on it. We finish it. So the question that I'll use to enable me explain the concepts, I'll focus on May 2024 question number 7. May 2024, question number 7. May 2024, question number 7. And we can start reading it. If you have it, you can open. Can I just slightly increase it? But I'll reduce it when I start doing it. So May 2024, question number 7, process costing. I'm looking for a process costing question with work in progress. The question reads, Virunga makes a product which is manufactured in two consecutive processes. Information relating to process 2 is as follows. Opening work in progress, 1,600 units completed as materials 80%, added materials 60%, conversion 40%. Normal loss, remember normal loss is also called expected loss. Normal loss is 5% and the scrap price per unit is 1,500. During the month, 6,000 units were transferred from process 1, costing 37,200,000. Added materials were 9,600,000. Conversion costs were 11,800,000. Output units were 5 million. Closing work in progress were given there. Now you have been told the method to use. I don't know now what. Allow me to take more time in this question, but I teach the two methods. Is that okay? I feel I should cover the two methods because we don't know which one can be tested. You are being told to use average cost method, but remember there is also the FIFO method. So I'll take more time to enable me cover the two methods. Are we okay with that? You know, if we cover the two methods, you'll be in a position to compare them. Okay, so let's move on. Let's now start answering the question. So where there is the word AVCO, we will do both. We'll do AVCO and we'll also do FIFO. So using average cost method, prepare the following. Number 1, statement of equivalent units. Number 2, statement of cost per unit. Number 3, calculate the value of output. Number 4, calculate the value of closing inventory. Number 5, calculate the value of abnormal loss or gain. And number 6, prepare process 2 account. And then part B of the question, which we can just finish with, explain any 3 characteristics of process costing. In the textbook, there are around 4 characteristics of process costing. The first characteristic, output in one process is input to the next process until the finished product is made. Output in one process is input to the next process until the finished product is made. That is the first. The second characteristics, there is always closing work in progress. There is always closing work in progress as a result of the continuous nature of production processes. There is always closing work in progress as a result of the continuous nature of production processes. Number 3, output is normally in, I'm not reading from anywhere. It's just from your notes, but of course I don't have the notes here. Number 3 is output can be in the form of main product, byproducts, or joint products. Output can be main products, byproducts, or joint products. And maybe the last one, there are always losses. There are always losses as a result of the process due to spillage, evaporation, etc. They are often losses. Those ones you can read directly from the notes. Now, let me now reduce the size so that we answer the question. So we have agreed I'll be doing both, but let me start with I'll start with average cost method. I'm just doing some small editing here and there. Okay. So requirement 1, so we want to prepare using average cost method. So my starting point is average cost method. Average cost method is what I'll start with, and then later on, I'll do the other method. Number 1, requirement 1. Sorry, requirement 1 is prepare statement of equivalent units. So statement of equivalent units. And we are using which method? AVCO. Statement of equivalent units using the AVCO method. Statement of equivalent units using the AVCO method. Now, in order to use the AVCO method, the following are always needed. You need to know what are your output units, what are your closing work in progress completed, Of course, units completed. What is your abnormal loss or gain units? Let me take it as a loss. If it's a gain, I'll change it. Abnormal loss units. And then we'll have what we call total equivalent units. Don't worry, I'll expand the boxes. Let me expand the boxes. I'm again repeating. So that is what you'll need. Okay. Now, in the statement of equivalent units under AVCO method. So statement of equivalent units under AVCO method. Now, in your rows now are the contents that we have here. So we'll have here materials. I'm just picking from here. Materials, added materials, and we'll have conversion. If you'll be in a position to comfortably fill this table, you will earn all the marks on statement of equivalent units. If you can comfortably fill that table, that is statement of equivalent units. I'll come back to it. Statement of equivalent units. Number 2 is statement of cost per unit. So the second item we are being asked, statement of cost per unit. And we are still using which method? AVCO. AVCO method. Now, statement of cost per unit, we are still using AVCO method. Now, in statement of cost per unit, you will need to know what is total amount. I will explain what is that. You will need to know what is total equivalent length units, and you will need to know what is the cost per unit. These other contents still remain the same. Sorry. These other contents remain there. I'll copy that. I'll come and paste it there. The other contents remain the same. So let me have that. So if you are calculating the cost per unit, please, if you don't know this, please write it somewhere, the format. So if you want to get the cost per unit, that is the format that you need to use. What is our third requirement? Once I've prepared such tables, it's very easy to answer the question now. Next, calculate the value of output. So requirement 3. Requirement 3, value of output. Now, when getting the value of output, again, the same. Now, you will have the units, you will have the cost per unit, and then you'll have the total value. Total value. And then you can just call it total amount or total value. Total amount or total value. Again, I'll copy that the way it is, and I'll come and paste it there. Of course. So, and I can get the total there. So this will be value of output. Again, that is a template you need to have for you to get the value of output. I'm just reading what you've been asked. Next, calculate the value of closing inventory. Number 4, value of closing inventory. Value of closing inventory. Again, I just pick the same. I'll copy that and I'll come and bring it, paste it there. But here I'll have value of closing inventory. Okay. If you can master the format, you save a lot of time. Value of closing inventory. What is the next requirement? I just want to ensure I answer everything. Calculate the value of abnormal loss or gain. For now, let's assume it's a loss. If it's a gain, we'll change it to a loss again. So number 5, value of abnormal loss or gain. If it's a gain, I'll remove the loss. If it's a loss, I'll remove the gain. So copy that. I'll come and paste it there. But I get it as value of abnormal loss. If it's a gain, I'll change it to a gain. So we are almost there. So next, prepare process 2 account. Okay. So that is number 6. Process 2 account. Now, in order to prepare a process account, you'll need the following. 1, 2, 3, 4. 1, 2, 3, 4. You'll need to have a T account with 4. You know, once you do this, it becomes very easy to complete the question. Completion of the question becomes very easy. So you are being asked to prepare process 2 account. Now, so here you always show what are your particulars, what are your units, what is your price per unit, and what is your total amount in both sides, the debit side and credit side. Particulars, you'll need to show your units, you'll need to show your price per unit, and finally you'll need to show your amount. Okay. Now, in a process account, you must start with opening work in progress. And then there is materials. I'm looking at this now. I'm looking at this. There is materials. There is added materials. There is conversion. And then on this other side, there is normal loss. Normal loss. There is actual output. There is closing work in progress. And then, depending on which side is more, we can either have abnormal gain if the balancing is that side, or we can have abnormal loss, but not both of them. And then we have the totals. If you can fill that table, you are as good as done. So can we read the question and I fill them one by one? Opening work in progress was 1,600 units. So opening work in progress, 1,600 units. Now you are being told completed as, opening work in progress 1,600, completed as, materials added, and that. So you'll need to add all that. 9.4, let me note it somewhere so that I don't go back. 9.4 million plus 1.2 million plus 2 million. I'm just taking in my notebook so that I don't go back. I'm adding these 3 is the total of opening work in progress. So I'm adding the 3 so that I don't go back. So I'm saying the first one was equals to 9.4? 1, 2, 3 plus 1.2 million plus, was it 2 million? I'll correct it if it is wrong. 2 million. So it gives you, let me just go back and verify again. Yes, 9.4, 1.2, and 2 million. So that gives you a total of that. So that is opening work in progress. And then you are being told down here, normal loss is 5% and scrap price is that. 1,500. We'll come back to that. During the month, and this is important, 6,000 units were transferred from process 1. Remember, we are preparing process 2 account. So during the month, 6,000 units were transferred from process 1, costing 37,200,000. So output from process 1 is input to process 2. So 6,000 units were transferred from process 1. So materials from process 1 is 6,000 units. So output in process 1 is input in process 2. So we are in process 2. So costing 37,200,000. So I go and post 37,200,000. I go and post that. Oh, okay, sorry. Let me write it in full. 37,200,000. So I go and again continue the question. Added materials were 9,600,000. Added materials were 9,600,000. I hope it's that. 9,600,000. Conversion was 11,800,000. Conversion was 11,800,000. I'm just posting everything into the process. Next, you are being told output were 5,000 units. Output were 5,000 units. Output was 5,000 units. We continue. We continue. Closing work in progress was 2,200 units. Closing work in progress was 2,200 units. Now we have everything that we need to put there. Now the next step is to compare the total. No, we've not got the normal loss still. Normal loss, where is our normal loss? We were given normal loss, where is it? Normal loss is 5% and scrap price is 1,500. Normal loss is 5% and scrap price. So normal loss is 5%. Can we look at this? Let's be careful here. Normal loss is 5% times your input quantity. Times your input quantity. So it's 5% of input. So it is 5% times input quantity. 5% times input quantity. So, and you are told the scrap price is 1,500. The scrap price is 1,500. And that therefore gives us 300 times 1,500. It gives you 450. Now, what I was saying was this. Once you have added that, you get the total of the units on the debit side. 1,600 plus 6,000 is 7,600. And you compare to the credit side. Credit side is 7,500. Here is 7,600, which means the debit side is more. So the debit side is more. So you take 1,600 plus that. The amount that is more is what you post on both sides. The amount that is more is what you post. I'm just repeating so that it sticks. The amount that is more is what you post. So in this question, we don't have abnormal gain. We have abnormal loss. Why is it abnormal loss? Because the total on the debit side is more than the total on the credit side. And therefore, the balancing figure is on the credit side. If the balancing figure is on the credit side, I'm repeating, if the balancing figure is on the credit side, it is an abnormal loss. So it is abnormal loss if the balancing figure is on the credit side. It's abnormal gain if the balancing figure is on the debit side. So maybe let me put blank figures there. I'm just putting blank figures there to enable me underline. I just want to underline so that we can easily close the process. Please, if you can master this format, you can get 20 out of 20 in a process costing question. So I'm again repeating, this is what you need to answer an AVCO question. Now, we go and start filling the gaps one by one. So we have filled what is needed from the question. Now, what was the requirement one? Statement of equivalent units. So you go to the process account and you can see the output is 5,000. Output does not have work in progress. Output does not have work in progress. So output is normally 100% complete. Output is normally 100% complete. So it is 5,000 units. You take it as 100%. Output is always 100% complete times 5,000 units. Output is normally 100% complete. I'm really stressing that, times 5,000. Where did I get 5,000? From the process. So you are told from the question also, you are told output is 5,000. Now, closing work in progress completed. Now, for closing work in progress, you come here. You are told closing work, was it 2,000? Yeah, I must have made a mistake there. Okay, yeah, it's correct. It's correct. Closing work in progress is 2,200. But you are being told completed as. Materials was not 100% complete. Added materials was not 100% complete. Conversion was not 100% complete. So materials, closing work in progress is 2,200, but for materials, it's 90%. So I come and have here 90% times 2,200 is the closing work in progress. That is materials. Added materials is 75% complete. I come and have here 75% times 2,200. 2,200 is the closing work in progress. And the last one is 60%. 60% times 2,200. So I've added all that. Now, abnormal loss, we've confirmed it's an abnormal loss. Abnormal loss, you take it the way it is, unless you are given percentages of losses. So if you are not given percentage of losses, you assume abnormal loss is 100% complete. 100%, because a loss is complete. A loss is complete. So you take the 100 units of losses, 100%, 100% of 100. I'm again repeating, you can see abnormal loss here is 100. Loss is always complete. Unless you have been told loss was 60%, 50%, you use the percentage given. Now, total equivalent units, let's be attentive, is output plus closing work in progress plus abnormal loss or gain, if any. That gives you the total equivalent units. So it is output plus that plus that. It gives you the total equivalent units. It gives you the total equivalent units. Now, these total equivalent units that you have found is what you bring there. That total equivalent units is what you bring there. Now, total amount, and take note of this. This many people confuse this. Under AVCO, I'm repeating, under AVCO, total amount, you take opening work in progress plus the inputs. For example, the total amount here will be opening work in progress materials is 9.4 million materials plus the period cost is 37,200,000. 37 million, I'll show you through the process account. And then you minus any normal loss amount. Do you have normal loss amount? You minus any normal loss amount. Because it's a loss, you minus 450. You minus any normal loss amount, 450,000. So it gives you 40. I'm repeating. Under average cost method, you take opening work in progress materials plus the materials that was from process 1. The material that was process 1 minus any normal loss amount. It gives you the total amount. Under added materials, the same concept. Added materials, you take 1.2, you add 9.6. 1.2 plus 9.6. Added materials, there was no loss on that. The loss was only on the input. The loss was only on the input. So that is added materials. Conversion, the same. Conversion is 2 million plus 11,800,000. 2 million plus 11,800,000. Is that correct? Yeah. So what does this give you? Cost per unit, therefore, and you are told here, let me just, cost per unit should be to 2 decimal places. You are told to 2 decimal places. So our cost per unit is now total amount divided by total equivalent units. Total amount divided by total equivalent units. Total amount, and you are told to 2 decimal places. That is to 2 decimal places. Total amount divided by total equivalent units. You come here, so where there is cost per unit, you just transfer those figures there. So the cost per unit is that. Where it is there, where there is cost per unit, you just transfer those figures. And to 2 decimal places, okay, where there is cost per unit, you just transfer the cost per unit you have calculated. Where there is cost per unit, you just transfer so that you save time. Where there is cost per unit, you just transfer it so that we save our time. Okay, so we have posted all costs per unit that are needed. Now, what are our units of output? You go to the equivalent unit statement. Units of output is 5,000. So I just scroll down. What is the units of closing work in progress? I go back again to equivalent. Closing work in progress, it is that. And I scroll down. What is the units of abnormal loss? Again, abnormal loss, I go and pick it from statement of equivalent units. That's why this statement is important. And I scroll down. So I've picked all that. So finally, what are the values? The value is units times the cost per unit. Units times cost per unit. Units times cost per unit. So unit times cost per unit, it gives you that plus that plus that. It gives you 51 million. So this 51 million is the value of the values that we are looking for. Here also we repeat the same. This times that to get the values, and then we add 12 million plus 2.6 plus 2.8. So again, I can highlight it because I'll be looking for it somewhere. Okay. Here also the same. Units times cost per unit. Units times cost per unit. I'll come and take 651. I know I can use AutoSum, but I'm just doing step by step so that you follow. So again, I can use that. So we have the total values. Now, finally, we come and place them in the process account. In the process account, what is the total value of output? The total value of output is 51 million. I bring it there. 51 million. I bring it there. What is the total value of closing work in progress? It is 18 million. I bring it there. 18 million. I bring it there. And what is the total value of abnormal loss? I bring it there. And then, how do you know you are right if it balances? So I'll take 12 plus that, plus that, plus that. So it gives me 71,200,000. Let's see this side. 450 plus 471 plus that, plus that. Yeah, it has balanced. That is using average cost method. I'm again giving you 1 minute to see it step by step before we go to the other method. I'm again repeating, in average cost method, under the average cost method, you start with statement of equivalent units. Now, under statement of equivalent units, you show your output units, you show your closing work in progress units, and you show your abnormal loss to give you total equivalent units. Statement of cost per unit, this is where the difference is. Cost per unit here, the total amount, remember you must add opening plus the cost of the period cost. Opening plus the period. Of course, if there is a loss, you minus. Opening plus the period. So that's how we prepare. That is how we prepare. Again, Icpar will share with you this. I'll share with Icpar this Excel sheet. Now, let me highlight this so that you know it is AVCO. That was AVCO method. Average cost method. Average cost method. So let's go to the other method. We were not asked, but because we are learning, the other method is FIFO method. So let me bring it here. FIFO method. FIFO method, so that you can compare them. FIFO method. And I'll just go step by step so that you can be in a position to compare them. So I'll start with number 1, so that you see that there is nothing I'm changing. I'm just coming and I paste that there. The second one, I'll copy that and come and paste it there. The third one, so that you can compare and contrast, I'll come and paste it there. The fourth one, I'll copy and come and paste it there. The fifth one, I'll copy that. The contents may be different, but the requirements are the same. And the sixth one, and paste it there. So let me start with the last one, the process account. So let me copy that. I've just posted it here so that we save a lot of our time. I'll remove these values because they will change. I'll remove those values. So you realize most of the things, I'm retaining almost everything. So let me copy this. I'm just copying most of the things so that I save time. Just be patient with me, please. Let's just be patient. I'm just copying so that I save time. I'm there. I've copied everything that I need. Now, let's be attentive. Now, we are now changing to FIFO method. I can now hide. I can hide this so that I have more working space. Can I hide now AVCO, now that I've copied everything that I need? Let me hide it. I'll open it later on. So that is our question. And now we are in FIFO method so that we can compare them. So this is now not AVCO. It is FIFO. This is not AVCO. It is FIFO. So the contents, I'm changing now the contents. I'm now changing the contents to reflect FIFO. Now, In FIFO method, the equivalent unit statement, I'm repeating, in FIFO method, the equivalent unit statement has the following contents. Number one, there is what we call opening work in progress units not completed. You pick what is not completed. Opening work in progress units not completed. Opening work in progress units not completed. That's the first item you pick. Opening work in progress units not completed. And then number two, you come and have what we call fully worked units. Fully worked units. I'll explain what that is. Next, we have closing. I will explain what that is. Closing work in progress units completed. Next, we will have after closing work in progress, next we'll have, we already now know it's abnormal, loss units. And then is when we have total equivalent units. Let me explain the difference. Let me explain the difference. I'm repeating. Under AVCO method, here we had output, here we had closing work in progress units completed, and here we had abnormal loss or gain. But under FIFO method, we start with, opening work in progress. Sorry. Under FIFO method, we start with opening work in progress, units not completed, not complete. And then we go to fully worked units. Now, fully worked units is output minus opening. Fully worked units is output minus opening. Closing work in progress units completed, that is there in the question, abnormal loss and total equivalent. Here, cost per unit remains the same as what we did the other side. Cost per unit, so we'll have total amount, but how we calculate total amount will be different. And then we have total equivalent units. And then we'll have cost per unit. We can have that. Okay. Same value of output now here. We'll get, first of all, value of fully worked. We'll start with opening not completed. And then we'll come with opening completed. I will explain. And then we'll have what we call fully worked. And then I'll have a column for the total value. I will explain through an example. When we are solving the example, I will explain those contents. I will explain each and every content there. So we have that to get the value of output, value of closing work in progress. You will have units. You will have cost per unit, and you'll have the total amount. Again, you have that, and then you get the total there. Finally, abnormal loss, the same. So quickly, let's fill the gaps. So this is what we need. The difference is in this and that. The difference between the two methods is on statement of equivalent units and cost per unit. Now, opening work in progress, let's be attentive, was 1,600 units. Completed. 80% is complete. If 80% is complete, what is not complete is 20%. Here we are looking for what is not complete. So what I do, I take 20% as what is not complete. I multiply by the number of units. It gives me 320. I come to the next one, added material. 60% is complete. If 60% is complete, what is not complete is 40%. 40% is what is not complete. And the last one also, 40% is complete. Therefore, what is not complete is 60% times 1,600. I'm repeating. Opening work in progress units not completed. Not completed. You come to opening work in progress, the units are 1,600. Complete. Complete is 80%. So if 80% is what is complete, 20% is what is not complete. So you get 20% of 1,600. You come and post it there. The next one, what is not complete? Let's move on. Next, you go to what is called fully worked units. Fully worked units is the difference between your output units and your opening work in progress. Your output units is 5,000 and your opening work in progress is 1,600. So you get the difference between, I'm again repeating, the difference between output units and opening work in progress. So it is 5, I'm just repeating the same, 5,000 minus opening work in progress. 5,000 minus opening work in progress. Closing work in progress completed. Opening is not completed. Closing is what is completed. So let's go and pick closing. Now closing is here. Closing work in progress, now we pick completed, is 2,200 units. Completed as. What is completed is 90%. So I'll pick 90% times 2,200. Next one is 75% times 2,200. And the last one is 60% times 2,200. What is not happening there? Oh, I have not put the equal sign. 2,200. I'm again repeating. Closing work in progress, you pick what is completed. 2,200 completed, 90, 75, and the total. Now, abnormal loss, we said you always pick 100% unless you have been given the percentage. So 100% times 100 units times 100, the loss is 100. So this is 100% times 100 units, and this is 100% times 100 units. So what is our total equivalent units? Total equivalent, you just do now the addition. So what is our addition of total equivalent units? It is 320 plus 3,400 plus 1,980 plus 100. So what does it give us? 5,800. Now that total equivalent units, you bring it here because it's needed there. So that total equivalent units, I bring it there. Now, in AVCO method, how are we getting the total amount? We were taking opening plus period. In FIFO, we only take the opening. But you minus the loss. In AVCO, I'm again repeating. In AVCO, we were taking opening plus period minus the loss. But in FIFO, we only take the period costs. In FIFO, we only take the period costs. We don't add the opening. We only take the period costs. We don't add the opening. Cost per unit to 2 decimal places. This divided by total equivalent units to 2 decimal places. So you see the cost per unit in the two methods are different. So depending on what you had used. So you are told cost per unit, you are told in the question to 2 decimal places. To 2 decimal places. So where there is cost per unit, I post it, but I post it to 2 decimal places. 2 decimal places. Where there is cost per unit, I post it, but to 2 decimal places. Okay, now. I'll start with what is common. What is common is abnormal loss. We already have it. Here, there is abnormal loss. I can pick it and come and post it there. Abnormal loss, I've picked it from the equivalent units and I can get the amount. It is units times the cost per unit. Units times the cost per unit. And then I can get the total. 630 plus that plus that. That's abnormal loss. So you get that. Closing work in progress, I also have it. 1980, where it is there. Closing work in progress, I also have it. So I have the units times the cost per unit. So, wow, the figures are big. I hope it will balance. So cost per unit is so this plus that plus that. Okay. Again, let me pick them. So what is remaining now is value of output. So let me transfer what we have already calculated. Abnormal loss, we have already calculated as 1 million. Closing work in progress, we have already calculated as that. Now, where there is a problem, okay, really not a problem, where you need to be keen is now the last part, value of output. It is completely different. It is completely different. Okay, now take note of this. Opening work in progress. Remember, this is opening work in progress. And this is also opening work in progress. Let me start with what is given in the question. Opening work in progress completed. Opening work in progress completed. You have been given the amounts here. So post them the way they have been given. Completed. So here I'll come and pick, where is this now? Opening work in progress completed. I come and pick the value 9.4. 9.4 million. The next one, opening 1.2 and 2 million. 1.2 and we have 2 million. Is that 2 million? Yes. Now, the rest, we get them from here, from equivalent units. You can see equivalent units here. Now, look at what I'm doing carefully. Opening not completed is here, but these are the units. So you take the units, you multiply them by the cost per unit. Fully worked is also here. You take the units, you multiply by the cost per unit. So let me start with not completed units materials. You take the units, you multiply by the cost per unit. It gives you an amount. The next one, you take the units, multiply by the cost per unit to give you an amount. The next one, you take the units, multiply by cost per unit to give you an amount. Fully worked, the same. You take to fully worked units, multiply by cost per unit. It gives you an amount. Fully worked units times cost per unit. Fully worked units times cost per unit. I hope I picked the right thing. So what is the total value? You take opening plus fully. So the first opening is opening not completed. The second one is opening completed. And the third one is fully worked. And I get the total. Finally, I add 32 plus 7 plus 10. And I think we are done. If it is balancing, we are okay. If it is not, we'll have to find out why it does not balance. But I think I did the right thing. It should balance. 51. I just pick that value of output. I come and bring it there, and it has balanced. But remember, the amounts are different from the one under AVCO, but it balances. So this is under FIFO method. Again, I'm repeating, you don't need to write that because of time. If I give you time to write, we may not finish. So this is now FIFO method. You can now compare them. FIFO method and AVCO method. So you have the two, and you'll be in a position to compare them. A, B. So I'm just comparing the two. Well, that has taken me a lot of time, and process costing is normally the widest topic. So let me see the questions. Please, I don't see how you find the total amount in two. The total amount in two. Valentine, can you repeat your question? Total amount of what? Total amount of what value? Is there a time when we can't be given the scrap price? Yes. The person called Galaxy, next time log in with your name. Valentine, just retext your question and then I'll answer you. The person with the Galaxy XS8, is there a time when we are not given the scrap price per unit? Yes. That's a good question, Galaxy. Now, if you are not given the scrap price, take note here. You'll take there as 0. So if you take that as 0, this will be 0. You see it will still balance. So if you are not given, you take it as 0. Is that clear? But here it was given, so let me return back to it. So if it is not there, you take it as 0. I hope I've answered that question. Total amount in the statement of cost per unit using FIFO. Okay, that's good. Now I've understood you, Valentine. In the statement of, okay. Under which method? You have said under FIFO. So let me come to here. So total amount here. Now, in AVCO method, we were taking opening work in progress. Let me repeat. In AVCO method, let me just go to the question. In AVCO method, you are taking 9.4, you are adding 37, and then you are minusing normal loss amount of 450. That is in AVCO. In FIFO, you don't add the opening. In FIFO, you only take these. I'm repeating. In AVCO total amount, you are taking 9.4 opening plus 37 minus any normal loss amount if it is there. If it is not there, it is 0. But in FIFO, you only use 37. I'm repeating. In AVCO, added materials, you are taking 1.2 million plus 9.6. In FIFO, you only use 9.6. Have I answered you? Is it clear now, Valentine? Just type yes so that we move on, Valentine. What if there is a gain? How are we going to calculate statement of cost per unit? That's a good question again. You know, I need these questions so that I answer all your questions. Now, what about if there is abnormal gain? Let me start with AVCO, abnormal gain. So if there is abnormal gain, it will not be here. We all agree it will be here if it's abnormal gain. Now, when you come here, in the statement of equivalent units, here you will type abnormal gain, but you will not add it, you will minus it. So you will write it as minus 100 if it is 100. So it will be a minus. So, or you can have it abnormal gain, but when having it here, you take this plus that minus that. So if it's a gain, you minus it when getting the total equivalent units. You minus it. Is that question answered? Whichever method, whether it's FIFO or LIFO, you minus it. Okay, NZ, whatever name that is. Okay, I don't have much time. I think I've answered all your questions. Please, I don't see how to find the total amount. I've already explained that. So I think I've already answered all questions. The Excel sheet will be shared. Allow me to continue. So that's how you answer process costing with work in progress. So all the best there in case it comes in exams. Can you allow me to go to the last part? So far, we have covered standard costing. We have covered process costing, which took us a lot of time. We have covered activity-based costing. So why don't we go to decision making? Decision making. So in decision making, we want to look at how do we find the optimal production plan, total contribution, and maybe fixed and maybe profit. How when there is one limiting factor. I'm repeating, how do we find the optimal production plan, total contribution, and total profit when we have limiting factors? When we have limiting factors. Somebody's asking me, what about a gain in total amounts? It's the same concept. Here, if it's a gain, you just take the units of gain, you multiply by cost per unit to give you the total amount. It's the same. The only difference is if it's a gain here, you minus. But now when getting the value, if it's a gain, you just take the cost per unit which you have calculated, multiply by the gain units to give you the value. I hope we are together. Okay, can we move on please to the last question for today? We have really, okay. Now, what I'm saying now, I'm going to decision making, and I'm focusing on what we call limiting factors. And how do we identify limiting factors? That is number one. How do we find the optimal production plan? And number three, how do we find the total contribution? How do we get the total contribution? So let's look at this question. I know according to the plan I shared with you, limiting factor was supposed to be tomorrow in the next class. The next class is on Sunday, but I'm covering it now because I don't want to go to budgeting right now because there are 3 types of budgets I want to cover. I may not complete 3 types of budgets if I start budgets today, right now. So that's why I'm going to limiting factors. I hope you've understood. So that in the next class, I'll start with budgeting because I must cover cash budget, I must cover functional budgets, and I must cover flexed budgets. So that can take me more time. So let me focus on this, okay? Now, this was a question, May 2024, question number 4, part A. The question reads, we can follow it together. Amani Limited manufactures 3 products. I'm repeating, May 2024, question number 4A. Amani Limited manufactures, you realize I'm revising 2024 questions. Amani Limited manufactures 3 products, namely A, B, and C. The following data relates to the 3 products, A, B, and C. So you have been given the selling price per unit, labor costs, and raw materials. And then you have been given the demand also in units, 2,000, 3,000, and 1,800. Additional information. Now, what's our additional information? So what is our additional information? Highly skilled labor is required for the installation of the 3 products in customer premises. So you have been told highly skilled labor. So most likely labor is the limiting factor. A maximum of 25,000 hours of highly skilled labor are currently available. At what price? 80 per hour during the production period. Fixed cost for the production period is 4.5 million required. Find the current shortfall in highly skilled labor. In other words, find the limiting factor and how much is it. Number 2, calculate the optimal production plan. And requirement 3, calculate the profit at the optimal production plan. The point I'm trying to make is this. Let me give you some few notes before we attempt the question. Now, in my few notes that I want to give, remember, limiting factor arises when resources needed, what you need are more than the resources available. Limiting factor arises when, so some few notes that you need to know on limiting factors. So limiting factor arises when what you need is more than what is available. When what you need is more than what is available. Steps that are followed. Steps followed in finding the optimal production plan and total contribution. The steps that you follow when you are finding the optimal production plan and total contribution. Once you master these steps, the question will be very easy. So step one, identify the limiting factor. Identify the limiting factor. That is step one. So limiting factor, we have said, arises when resources, what have we said? Resources needed are more than resources available. I think there is clear. I can move on. Step two. Step two is to calculate contribution per unit. So we can say here, contribution per unit is equals to selling price per unit minus variable cost per unit. That is step two. Step three, calculate contribution per unit of limiting factor. Of contribution per unit of limiting factor. So that will be equals to contribution per unit divided by hours per unit. If limiting factor is hours, if limiting factor is materials, you divide by kgs per unit. You divide by kgs per unit. Step 4, rank the products. So when ranking, use the results of step 3 to do the ranking. Step 5, allocate the scarce resources. This one, there is no way I can explain it. I'll only give an example when we are doing it. Allocate the scarce resources. And then step 6, find the optimal plan and total contribution. Find the optimal plan and total contribution. I'm in some training call after 1 hour. So find the optimal production plan and total contribution. So that one we will find. So if you can master these steps, you'll be good to go. Those are the steps that you need to follow. Those are the steps you need to master in order to answer any question on limiting factors. Any question on limiting factor, and limiting factor is a common area of exams. I'm not saying it will be there in exams, but I'm saying it's common area of exams. So with that in mind, let's look at the steps one by one. I think my sound is there, Eliza. Eliza, I think the problem is, can you people hear me? Just type yes. I think the problem is there is one person, not everyone. Can you hear me? Okay, let's continue. Thank you. Let's continue. Okay. So, Eliza, please work on your sound. So, in order to answer this question, I've given you the steps that we normally follow. So, here I'll just come and start with step 1. I don't know why it's not Roman times. I like using Roman times. Okay. So let's start with step 1. If you can follow those steps, you'll be in a position to crack this question. So step 1 is identify the limiting factor. And what are we saying? Limiting factor arises when resources needed are more than resources available. I think that is clear. I've repeated it over and over. So can we look at labor hours available? Can we look at labor hours available? Labor hours available. So I want to find my labor hours available. Labor hours available, you are being told a maximum of 25,000 hours of highly skilled labor are currently available. So you can see the labor hours available are what? 25,000 hours. Is that clear? And then we come to labor hours needed. How many labor hours do we need? We need to calculate this because they are different. So we'll need to have what are our hours per? I'll need to have what is my hours per unit. I'll need to have what are my units, and I'll need to know what are my total hours for each product A, for product B, and for product C. Units is given here 2,000, 3,000, and 1,800. So the units is 2,000. We can see that 3,000 and 1,800. Hours per unit is not given, but we can calculate it. You are told the labor cost per unit is 400, 560, and 800. But when you come here, you are being told, okay. Yes, yeah, down here. I was looking for it. Point number 1, the last sentence. A maximum of 25,000 hours of highly skilled labor are currently available at 80 per hour. So 1 hour takes 80 francs. But how much labor cost did we have per unit? 400. So if I want to get the hours per unit, I take 400, I divide by 80. Because 80 is per hour to know the number of hours. To enable me know the number of hours. The next one will be 560. 560, I divide by 80 to enable me know the number of hours per unit. And the next one will be 800. 800 divide by 80. Where did I get 80? I'm repeating. You can see the labor cost per unit is very clear. 400, 560, and this. But 80, I got it here. You are being told are currently available at 80 per hour. So when at 80 per at 80 per hour. So what is the hours per unit? We are saying it's 400 divided by 80. We are saying the next one is 560 divided by 80. And we are saying the last one is 800 divided by 80. So maybe to just confirm it is not point something, I'm just rounded to 1 decimal place. So with these, I can now get the total hours needed. I'll take 5 times 2000 to give me the hours there. And I just scroll down. And then you get the total hours needed. 10,000 plus 21,000 plus 18,000. So this gives you the total hours needed. Now, can you answer me? We had 25,000, but we have, is labor a limiting factor? Tell me, limiting factor or not? Yes or not? Can you type in the chat? Is labor a limiting factor? We have 25, yet we need 49. Limiting factor or not limiting factor? Answer me in the chat, please. Is it a limiting factor or not a limiting factor? So I'm saying, yes, it's a limiting factor. That is how you test whether there is a limiting factor or not. So we have agreed that labor is a limiting factor. So in short, we are done with step 1. So we come to step 2. Yes, labor is a limiting factor. Labor is a limiting factor. And what is the shortage? Shortage. So we can say labor is a limiting factor. There is a shortfall of how many hours? 49,000 minus 25,000. What is the shortage that we have? There is a shortfall of, you can get me that. So there is a shortfall of 49 minus that. Remember, 24,000. We were asked, can you confirm that we were asked that question? Find the current shortfall in the highly skilled labor. So there is a shortfall of how much? 24,000. So we have answered that question. So there is a shortfall of 24,000. So let's come to step 2. Step 2 is calculate contribution per unit. We have already said contribution per unit is equals to selling price per unit minus variable cost per unit. So we have A, B, and C. We have A, we have B, and we have C. So I'll need to find what is my selling price per units, and then I'll come and less variable cost per unit, variable cost per unit to give me contribution per unit. So we just go step by step. We can just pick them from the question and we move. So what is our selling price per unit? 2,500. 2,500 is in the question, this one here. 3,200 and 4,600. Variable costs are these two, 400 plus 700. So variable costs, $400 plus 700 is the first one. The next one is 560 plus 1,100. That's the variable cost, the second one. And the third one is 800 plus 1,550. So we minus. So if we minus, what do we get as a variable cost? 25 minus that. It gives you 14. If you minus, it gives you 114. So that is contribution per unit. Step 2, contribution per unit. We go to step 3. Step 3, contribution per unit of limiting factor. So contribution per unit of limiting factor is equals to contribution per unit you divide by hours per unit. So what is this? Contribution per unit of limiting factor. Contribution per unit of limiting factor is equals to contribution per unit. So let me just copy this. I'll take that. I'll come and post it there. I'll come and bring what is our contribution per unit. Contribution per unit, we have already calculated it as 1,400. We have that. And then you divide by hours per unit. So let's get the hours per unit. We had already calculated them somewhere. Was 5. The next one was 7. And the next one was hours per unit, 10. So we have it there. Now, what is our contribution per unit of limiting factor? 1,400 divided by 5. We get our answers there. So this gives you contribution per unit of limiting factor. So that is step 3. Contribution per unit of limiting factor. Contribution per unit of limiting factor. Step 4. Step 4, according to the steps I gave you, rank the products. Use the results of step 3 to rank. So again, I'll pick those ones to see how to rank. I'll bring them there. So use the results of step 3. So the rank, which one is the one with the highest? So remember, those are the results of step 3. Those are the results of step 3. So which is the highest? 280. So we will first of all make A, and then 225. This will be the second product to be made, and that will be the third product to be made when we are ranking. So according to our rank, we use these results. So in our ranking, the first product to be made is A. Once you are done with A, the second, so make A first. Make A first. Make B second. Make C second, and like that. And then this will be B is the last. B is last. So in our ranking, that is what we do. Ranking. The next part is the most critical one. Step 5. Now, because we don't have enough resources, allocate the scarce resources. Remember, our scarce resources, it is labor hours. Labor hours is the limiting factor. So in order to allocate it, we will come here and have a column for the rank. We have another column for the product that we are making. We have another column for the units we are making. We have another column for hours used. We have hours remaining. Okay. This is the best way to answer it. Now, which is the product ranked first? The product ranked first is A. So we'll start by making all the A's. A's, we had 2,000 units to make. So you'll come here and have 2,000 units. Now, that is A. What are the hours per unit of A? 5 hours. So what will be the total hours used? It will be 2,000 times 5 hours. So I'll bring the answer there so that we can clearly see it. 2,000 times these 5. I can pick it from there so that you see it. So it gives you 10,000. How many hours were available? The hours that were available were 25,000. Hours available were 25,000. You minus what you have used for A to know how much is remaining. So how much is remaining? You'll take 25,000 hours available, 25,000 minus what you have used is 10,000. So what is remaining? So after making the first product, what is remaining is 15,000. So can I just highlight this? So we are done with the first product. We go to the second product. The second ranked product was C. How many units of C were we to make? 1,800. You can see 1,800. So we were to make 1,800 units. You can all see that. And C is using how many hours per unit? C is using 10 hours per unit. You can see here 10 hours per unit. 10 hours. 10 hours. Let's be very keen here. I'll correct something. So if you take 1,800 times 10, it gives you how many hours? 18,000. Let's take note here. We don't have 18,000 hours. We only have how many hours remaining? After making A, we are only remaining with 15,000 hours. Yet, in order to make 1,800 units, you need how many hours? You need 18,000 hours. So we cannot make 18,000 hours. So what you do there, because that is more, 18,000, what you do, you take the hours that are remaining, you divide by the hours per unit. Hours that are remaining, you divide by hours per, no, sorry. That is giving you units. So the point is this. These are the hours that you will use. The hours you will use is the hours that are remaining. Because if we were to make 1,800 units, we will take 18,000 hours, but we only have 1,800. So here, by the time we make second product, there is nothing remaining. So you want to know the number of units to make. So the number of units to make is now what I was doing the other side. You take the hours that were remaining, divide by the hours per unit is 10 hours for C. And that gives you 15,000 divided by the 10 hours that is there. So it gives you 1,500 units. So you will make 1,500 units. You will make 1,500 units and your resources will be over. The third ranked product is B. You will not make any B because your resources are over. So there you will not make anything because your resources are over. So for the third product, you will not make anything. So that one is what is called allocation of the scarce resources. So if we are to allocate the scarce resources, that is how we will share the scarce resources. So that the total that is used is 10 plus 15. It gives you a total hours used of how much? 25. That is step number 5. The last step is step number 6. Step 6 is find the optimal production plan. Find the optimal production plan, total contribution, and sometimes profit. If you've been given the fixed cost, you must get the profit. You find the optimal production plan, total contribution, and what? Profit. So again, I'll have the rank. I'll have the, okay, I'll just have the product because you now know. And then I'll have the optimal plan. Optimal plan is the number of units you are to make. And then I'll have contribution per unit. I'll have total contribution. Now, which is the first ranked product is A. The number of units of A we are to make is 2,000. The contribution per unit of A, what is contribution per unit of A? Is 1,400. The second ranked product is C. C, we are to make 1,500 units. From here, 1,500 units. Contribution per unit of C. Contribution per unit of C is 2,250. And the third product to be made, we will not make any units. And contribution per unit of that, contribution per unit of B is that. So what is total contribution? Total contribution is number of units times contribution per unit. So it gives you 2.8 million. That's okay. Okay. So what is your total contribution? Total contribution is what is your total contribution? Is 2.8 plus 3.3 plus 0. That's your total contribution. And then when you come and less fixed costs, fixed cost was there in the question. Can I see it? Fixed cost was there in the question was given. Fixed cost for the production is, for the period is 4.5 million. So fixed cost is 4.5 million here, 4.5 million. So you less fixed cost. So our fixed cost is 4.5 million. So what we get is profit. So that gives you a profit. So profit is this minus that. So it gives you a profit of, that amount. Total contribution is that, and the optimal plan is that. So you make your conclusion. You know, as a manager, you must make a decision in management accounts. The optimal production plan is to make 2,000 units of A, 1,500 units of C, and 0 units of B, to give total contribution of FRW 6,175,000 and total profit of FRW 1,675,000. And that is the match we can do. The remaining minutes may not allow us to. Let me look at the questions, the charts. How do you get the total contribution? Total contribution, Kepa, it's Lewis. Total contribution is number of units times the number of units times contribution per unit. Number of units times contribution per, and then you just add this. You just add the total of A, you just add this plus that plus that. Lewis, I think I've answered you. Any other question? Any other question? Any other question? I think we have today covered, we've seen how to answer questions. We have covered standard costing. We have covered process costing, two parts of process costing using AVCO. We have covered process costing using FIFO. We have covered activity-based costing, calculating cost per unit using activity-based costing, calculating the cost per unit using absorption costing, and then finally, we have covered limiting factors. How do we find the optimal production plan? Optimal production plan arises when the resources needed are more than the resources that are available. So you need to identify the limiting factor as the first step. Step 2, calculate contribution per unit. How do we calculate contribution per unit? Contribution per unit is selling price per unit minus variable cost per unit. Step number 3, calculate contribution per unit of limiting factor. If your limiting factor is labor, it is contribution per unit divided by labor hours per unit. If your limiting factor is materials, it is contribution per unit divided by kgs of materials per unit. Step number 4 is to rank the products. You use the results of contribution per unit of limiting factor to rank the products. Step number 5 is to allocate the limiting factor, what we call the scarce resources. How do we allocate the scarce resources? You need to know how many hours are used, how many hours are remaining, and you distribute them step by step. And then step number 6 is to find the total contribution, optimal production plan, and the profit. I think that dose is enough. That dose is enough. I'll share with Icpar these on Sunday. After the Sunday class, I'll share with Icpar all these. The recording also, it's Icpar which was recording. So Icpar was doing the recording. I think that now, please, on Sunday, it's very important. Sunday at 8 in the morning. I really expect all of you. Please cancel other things you are doing. We will be doing more 6 topics. On Sunday, we are going to revise 6 topics, so it's important. I really plead, let everyone attend on Sunday class. We'll be looking at 6 topics that I'm just trying to share something. We'll be looking at 6. Can you see the slides? Just type yes. Can you see the slides? Those are my contacts in case you need to reach me, but please don't call. The best you can do is a WhatsApp, because managing calls of 100 students is not easy. So those are my contacts in case you need to reach me. We will continue on Sunday. Maybe a quick feedback in the chat so that we know where to improve. How was the session? A quick feedback. The feedback also helps Icpar to know what to improve on, and also me as a trainer to know what, at least everyone to give a feedback as we end the session. A quick feedback in the chat, everyone at least to type some feedback, and those feedback, of course, they are saved because we are doing recording, they are saved, and it will enable us improve next time. Feedback, how was the session? Was it good? Was it bad? etc. At least everyone to provide the feedback as we wind up. Please make sure you attend Sunday session. Sunday session at 8 a.m. in the morning. Sunday, 8 a.m. in the morning. Don't miss, please. I'm waiting for the feedback. It's our last item. You know, it's important to have feedback, eh? Yes, Sunday will also be online. Sunday will also be online because we are bringing people from all over. It's not only Kigali. It's from all over Rwanda, so we cannot have a physical class. It will be from all areas, so it will be online. Variable cost per unit, Emma, you are asking variable cost per unit, but I thought questions are over. Variable cost per unit is direct materials plus direct labor cost. Material cost plus labor costs. Thank you. Somebody is asking station is good, but can you share the slides there? I cannot share the slides in Zoom. It's not possible to share. So I think I've read everything. Okay, thank you. Have a good night. Let's meet on Sunday.